Good morning, traders, and welcome back to BluSky Trading Live. This pre-market guided audio with me, Coach Becky, is here to help direct your conscious and subconscious thoughts to actively experiencing in your mind's eye your most successful trading session. I encourage you to hop on here live with me daily before you trade with a focused, calm intention. I know mornings are busy, but trust me and the science here, because slowing down and focusing now for 15 minutes will help set us all up for the best trading session. These visualizations I'm about to walk us through are designed to train your brain, what it looks like and feels like to perform at your optimal level, follow your prepared system, and trade as you ultimately desire to each day. Please do follow with me with regulating your breathing with purposeful, deep, centered breaths. And if it feels right for you, close your eyes now as you listen. I will lead us through a successful trading day with a focus on your daily habits, mindset, trading system, and personal objectives that lead to a high-performance analysis and execution. Visualize yourself with a strong, steady, focused mindset to behave as you intend during your trading session, to train your subconscious that you are fully capable of achieving your greatest goals. I do it, and I'm so grateful for these sessions every time I make time for them. So thanks for being here with me. Let's get into it. My body wakes ready as I've given myself the sleep and restoration needed to perform at a high level. Before I start considering my charts, my mind prioritizes gratitude. I give thanks for this new trading day. I give thanks for my safety, stability, and opportunity. I give thanks for my health, my mind, and my ability to participate in these markets. I give thanks for the responsibility I carry as a trader and for the discipline I continue building. I give thanks for everything aligning for me and through me. I set my intention for this session. I visualize myself moving calmly and purposefully through every step of my morning routine. I see myself prepared, grounded, emotionally steady before the futures market opens. I visualize potential setbacks, volatility spikes, fakeouts, delayed entries, and unexpected movement. I am not fearful though. I adapt. I stay flexible and fluid when I trade. I remain emotionally neutral and focused regardless of what the market delivers. I am fully prepared to step into the arena today. My mind is clear, optimistic, and alert. I am excited to see how my futures market has developed overnight. The story has, of course, continued unfolding while I rested and reset. With my trading space prepared and optimized, I sit down at my desk and log into my platform. The glow of my screens feels familiar. This is my workspace. This is my business. Trading is my craft. I begin gathering the most current information and context. I review overnight highs and lows, key levels, economic data, liquidity zones, areas where participants may become trapped or emotional. Every trading day tells a new story. I approach this session with curiosity and an open mind. I carefully observe where price is trading from the larger time frames all the way down to my execution chart. I have an entire toolbox available to help me study and interpret this market. I have experience. I have emotional control. I have the ability to participate safely and skillfully without fear. Many hours of screen time, practice, setbacks, and repetition have prepared me for this moment. Months and years I have put effort into my craft. I'm ready. I adjust my charts and finalize my trade plan.
Welcome to another episode of BluSky TV, guys. It is Friday. We have done it. We have made it to the end of the week. And looking at the chart, Bears are in full control right now. I don't see any world where this isn't dripping at 30K, which we are basically there now. If you caught the bear move overnight, great job. I know the Globex open. A lot of people on the stream were already short when we hopped on, so it was nice. I was able to catch a short. I didn't log on till the Asia session. I caught a 215 short. My target was 111, so that was a fun trade. Always nice going into the New York session, nice and green. So right now, I'm not going to try to catch this knife when my target is basically 30K. I want to see how we react there. I know that's going to be a lot of people's targets. I'm sure there's a lot of resting orders there. So let's wait and see what happens at open. Try to catch a play. It is Friday. Let's not blow our accounts. Let's not give back all of our gains for the week. Let's be smart. Oh, let me turn that off. Okay, there we go. So how's everybody doing this morning? Everybody make it to Friday nice and green? I know over here at BluSky TV, we've been very green for the week, so it's been an amazing week overall for the whole coaching staff. I had my first red day on the stream this week, so I had to get that out of the way. Now that that's gone, let's get back to the winning streak. But once we broke this kind of 100 level, this is kind of when the bears took over. Overnight, choppy range, but pretty big range, 100-point range. Looks like levels were pretty respected. Let's do some top-down analysis. Now it's very hard to argue that daily is not starting to flip a little bit bearish. Ideally, I see us running all the way down to 700. Do I think that's going to happen today? No. But that is my bear target for a clean reversal for the next leg up. 4-hour chart has clearly broken structure, and support would be about around 970, 980. So I can see us breaking 30K, running to there, maybe a little bounce. But if we break under basically the 900 level, we should run to that 700 level. Hourly clearly have broken structure to the downside. No indications of a reversal yet. So for now, bears are in full control. But too late to go short now. If we do pop up to 100, I'll look for a short. Statistically this week, though, the first about 15 minutes of the market have been my losing side of the trade. So I'm gonna be pretty smart today. I don't want to overtrade. I don't want to just hop in. It is Friday. A lot of big time traders take Fridays off. So let's just try to get some green, get the heck out of here, start our weekend on a good note. Morning, Vodka. Good morning, Tina Marie. But yeah, yesterday that dump was, by the time I logged on, we were down 300 points, I want to say. 200 points. The play of the day yesterday, or the play to start even a swing, was the 600 short. I know Becky caught it on stream. I was eyeing that so hard. Once we got up here around 2 o'clock, I was waiting for that 600 touch. Didn't get it till halfway through power hour, and then just knife. It was beautiful, beautiful play. Is anybody short? Did anybody hold shorts all night? Oh, no, rough hold through London, but that Globex drop was beautiful. Morning, Gabber. All right, so we're dripping down to 30K. I think it's inevitable. If you want to hop in and try to get 15 points, go for it. You held long 5 hours in London, stopped to break even on my runner. That's always fun. Long 970. Yeah, I like that area. That's a good area, 4-hour level. I could see a bounce there. I'd be treating any long as a scalp. For me to go long, what I really want to see is something like this. I would want to see like, I don't know, something like that. That would be my criteria for a long entry. Remember, guys, you don't want to. I mean, you can. It's fun, but I don't want to try to catch the bottom. I want to see like the reversal happen and then get in on the continuation. Cup and handle, buy model. There's a lot of different ways to call it, but I want confirmation that the price is actually going to do what I want it to do. I held the Tokyo top to bottom, got out green, and then gave it back to the market 10 minutes later. Oof. Guys, I'm a firm believer. If you hit a nice play during like the Sydney or Asia session, just log off. Unless you can only trade the that session, but I think the more you trade, the more you trade, more opportunities to get back to the market, especially if you already hit your goal or hit a really good trade. So there's open. So we literally bounced at a level at 0.006. We just bounced off of about 50 points. Let's see if we continue to the downside. All right, here's 30K. I have a feeling we're going to drip to that 980, 970 level. That's where I'd really like to see some sort of reversal to go long. If we get up to 30K and fail, I mean, this might just be a full bear morning. But the daily range for me, it doesn't have that much more room to go, so I'm not really trying to play shorts right now, unless we pop up back to the 100 level. If I do go long after the reclaim, my target will be this 100 level. So eyes on 100 for longs and shorts. Oh, we might get that sooner than later. I'm gonna chill till at least the first 5-minute candle prints. I think I've lost every trade I've taken this week in the first 5 minutes. Discount level at 995. Okay, got dang close. Doing well until NFP. What was the NFP candle? I'm kind of curious. Ooh, spike and drop. Well, here's the 100 level. If we reclaim 100, I'll play continuation to the upside. That was a quick bullish move. Morning, Adam. Block is long. Let's go. Oh, nice. There you go. NFP was bullish. Cool. All right, let's see if bulls can actually take us back into the next zone. That was a candle right there. Jeez. 80-point candle. All right. Let's see if the buy model structure starts to pop off on the 1 minute, translate to the 3 minute. We'll see. Bulls really want to hold this kind of 60 level and then this 35 level. Those go right back to 30K. All right, let's see if bulls can hold this right here. If they can hold this, it's a good sign that we might push out. I'm not convinced yet. That spike it open was just a little shakeout. Look at this wick now. So if you were long, I hope you took profit. Just like the rest of the week, this is moving very, very quick in the first few minutes. If you guys were with me on stream the past few days, any play in the first, I'd say 20, 30 minutes, the hold didn't last more than 1 minute. You got your target and it was done. There was no holding, no continuation at all. The theme of the week has been wait for the 4-hour candle to print at 10 a.m. And then you get your actually kind of like continuation move trend. So the move has been kind of bearish until 10 a.m. Then the bulls start to get in gear. And I'm curious if that's going to happen today. So we got the first minute candle print. It's basically zone to zone for me. So I want to see which side is going to break. For me, I'd like to see bullish side, and then we can just ride it all the way back to 360, hopefully. If it breaks to the downside, I'm going to be a scalper today. I don't foresee it going all the way down to my 700 target today. Good morning. Still bidding 970. I mean, I'd be surprised if we don't fall to 970. If you wanted to play the first 1 minute open, that was an amazing short at 100. I know it was kind of part of the plan, but I'm not touching the market in the first minute. So this is kind of the zone. This 100 to 9. Let's just call it 970, like Vodka said. This is kind of the zone I don't want interest in. I would love to see us kind of flatline here, pop back out. So we'll see if the magic lines work. No, I just drew these lines. This is just what I want to happen. I want us to come down, kind of hit a double bottom and pop out. So if you want to take a small stab at just like trying to catch the bottom, this is where I'm looking. No, I don't use any indicators. So everything you kind of see is just me drawing. The only indicator I use is this little table in the bottom right. It's called average daily range. It's basically how many points NQ has moved on average in the last 20 days, the last 10 days, the last 5 days, 3 days, and yesterday. And today we're sitting at 379, and the averages are between 400 and 440. So that's why I'm kind of saying the downside move might be kind of done. Once we start getting up to the numbers that we've been hitting the last 20 days, it's typically when it runs out of gas. Yeah, they're battling right here, which makes total sense. Price is kind of doing what it's expected. It's going to drip down to that 980, 970, and then we're going to see what happens. That is some crazy range. I agree. All right. Well, there's 970. There's the bear target if you were short. Now, like I said, I want to see this kind of a base form, push out, and then go. So there's a couple ways to play this strategy. You can do a stop buy at 30K and just hope it breaks back out. Or you wait for the push out and then play the retest, which is what I do. And there's the 30K test. Can the bulls push it out? Let's see if this goes according to plan. Okay, let's see. This would be really nice if I could get a good read in the first 15 minutes. If we do break, what is this, 960? I mean, we might have to just hop in. I would just much rather play the upside, but it hasn't told us to go long yet. Five accounts done, 400 each. Let's go. Good job already. Talk about a quick work day. All right, she's looking like she's just going to go further down. No bulls in sight. So here's my plan now. Something like that. Break 960, play the retest. Any reclaim of any bullish, just reclaim of levels, I'm pivoting to longs. That just makes more sense to me. But for now, I guess we're just going short. All right, there's a close under the 960. Let's see how much the bulls got or the bears have in them. Go ahead and place an order at 967. See if we get wicked in. Stops are going to have to be, I'd like to see 85 hold on the bear side. We should be in. All right, we're in. See if we can make a quick $100. All right, $100. Boom. Let's see if we get the continuation now. Really want to see a push under 950 now. All right. Hopefully that was the retest. There we go. All right, chat. We are cooking. We are cooking. I'm not messing around today. I'm going to take a couple off. All right. We just need to get a close under 950, and then we're looking for 920. There we go. Beautiful. 30 points, team. All right. I'm going to go ahead and I was going to lock it in, but that just spiked. I'm just going to put a buy order in here, see if we get tapped in. All right. We're all out for, I don't know, $200-300, something like that. Nice little scalp. Like I said, I'm treating shorts as scalps for now, just because I don't think there's much more room to go. But 920 is the target if you're still in. I'll take 30-40 points though. Almost at 920. These retraces are damn quick. It's like spike down, spike up. So I think there's some buyers sitting down here. This 920 should hit. There you go. 920 tapped. Oh no, 922 tapped, but the zone's hit. So if you took the short, let me know. That was a nice little play. 30-40 points. Good way to start. Okay, there's 920. So 40 plus points. Oh, wow. This is just going to die. You know what? Maybe we will run to that 760 today. Or 7 what I have. 730. Maybe we will get down there today. Took it late, but nice. There you go. Let's get it. That was a good scalp. Good way to start the day. Nice little $300 in like 3 to 4 minutes. Can't beat that, guys. This looks like it might just keep dripping down. So we get a candle under here, we might just have to scalp it again. Just scalp zone to zone. Yeah, I have something down there as well. 675. That would be pretty. I'd be pretty amazed if we actually get down there. Oh yeah, what are they doing? Nvidia's getting wrecked. Everything's red, futures wise. Is ES just dying as well? Yep. Oh, ES broke that key level. That was a clean break too. All right, she's just gone. She's gone. Oh, damn. Should have left one at least. You got 100 points. 880's next target if you're still in. I can't believe there's been like no actual retracement yet. We're now down 700 points from power hour yesterday. I mean, we're 15 minutes into the market and we've dropped 200 more points. It's pretty wild. There's 880. These bear targets are just getting absolutely smashed. What does a 15-minute ORB do? That is a candle. Okay. Should get a little bounce here. I'm curious if we're going to run back to this 920 area. Yeah, if we get below this like 840, we got a lot of room to go down. So I kind of got eyes on that. This might be the bear day everybody's waiting. It just happened to start yesterday at 6 p.m. Yeah, I mean, there's no signs of bulls here. Not even at the 920 retest. No retest. Just death. I'm gonna put an order up there just to see if I get wicked in. I don't expect it. But I'm nice and green. I'm not just gonna hop into something. Just gonna hop in. I'm curious. Like this is the ultimate last stand for bulls. Literally. And it's looking like they're just giving up. Crazy. Okay, good hold by the bulls. They're trying. Trying keyword. Done with short. Nice, nice. Curious if this is going to be the temporary bottom. Well, good job, Bears. You actually like finished the job for once. First time in months. Yeah, Breezy, I'm with you. I need to see like some strong confirmation to try to go long. It's hard to just fight this. Yeah, they will reverse, but where? And this is a damn good spot to be a reversal. But it's catching the bottom is just is crazy right now. We'll see if we get wicked in. This is one of those like tough spots to try to pick a side. Got the 4-hour candle printing in about 7 minutes. Starting to look like it's trying to find a bottom. We still have not gotten a pullback since open, besides that first spike. Let's see if we get tapped in here. And like I said, we are overextended to the downside, so I'm not holding for a home run if I get in. If I see quick money, I'm going to take it. And guys, I will be right back in like 2 minutes. Just give me 1 second. Sorry about that, guys. We didn't get tapped in, so I'm canceling that order. We broke down. We're running to 7:30. This is gonna happen. It's going to happen. Risk my eval 2K drawdown trying to long. I need to see. I need to see some action from the Bulls before I do anything like that. Let's just ladder down and try to catch this. Wow. This is just wild. What's up, Nacho? This is could have just marketed in at any point. I'm trying to just find a meaningful pullback to get in, but we're just not getting one. Would have been nice if we were still holding these 968 shorts, though, huh? It is what it is. Don't get FOMO, guys. Yeah, I didn't think that the Bears had it in them, but I mean 675 is on the table. Okay, good. It's so weird seeing YouTube names instead of Discord names. No, I cut my shorts. I just took my cash. It's really hard to just not just hop in. Well, if you are short, 730 is coming. And I got nowhere to get in right now. $760, maybe pit stop there. But yeah, that gap at 675, and then if it really wants to, 500. That would just be a wild freaking day. We're overextended like crazy. So not much for me to do except sit here and hope I get filled at this 80 or 840 entry. All right, let's see if we get it. Anybody trying to long this? Everybody's selling to buy SpaceX IPO. I wouldn't be trying to catch the bottom, guys. For me to be like really confident longs, I'd want to see a reclaim of this 960, but we're nowhere near that. 4 hour candle printed, and I mean, that's a big old bear candle, literally. We might actually get this fill. Oof, barely missed there, guys. This is just showing downside. I really want to get in. If I don't, it is what it is. I'm just gonna keep this entry and hope I get filled. Bulls are nowhere in sight. Nowhere in sight. Nvidia is just gap down. Gap down, lost support. It's very close to a danger zone. It's like 210 area, 211 area that needs to hold. MU's down quite a bit from that top. Yeah, they're getting slaughtered today. Last couple of days. ES ES doesn't have a setup either. I think this is gonna run down. Is there any structure where I can get in? Maybe 812. No, I'm just gonna keep mine. 812 is a potential entry as well, guys. If you want to try that. These are those kind of days where you only get it for the way I trade, like pullbacks. You only get a couple chances to get in. The best chance was that 100 level I mentioned at open. It was just right at open. I didn't want to mess with it. But then that entry we had was killer. Yeah, the daily candle is going to be ridiculous. Got a lot of buyers at this 760 area. The thing about catching the bottom is like you can buy at a key level, but you don't know how far it's going to kind of drip down before it reverses. Like your drawdown has to be, you got to be comfortable with drawdown or maybe layering in. All right. Let's see. If you took the front run entry, you're in. All right. We are about to get tapped in. I would want to see. Oh, did we? What? Dude, come on. Come on. What was that? 1 freaking point, guys. If you've been with me, you guys know if I miss an entry by less than a couple points, the second go around is much more risky. Much more risky. So just keep that in mind. I'm gonna keep it. See, just to see. I'm willing to pay to find out. Like that's a bummer. That would have been a quick 20, 25 points. All right. All right, we're in. If this is the bottom, it's going to be, we're going to catch some nice longs if I do get stopped out. We'll see. All right, I'm about to take the L at 60. This is starting to look like a bullish setup, but we need to see some confirmation. About to take the L. Yeah, we're out. All right, I'm actually going to start looking for longs now. I'm going to start looking for longs. And if I just got stopped out for it to drop, it is what it is. But this is starting to give me the bullish setup, at least on the small time frames. Want to see a push up to 880, come back down, have 840 hold, and then continue to the upside. So something like this. Something like that. If you want to take a stab at 840, it's not a bad idea. 840 longs. Oh, you got to be kidding me. I think this is going to be the push out. Oh, you damn bear. Wow. Stopped out by a couple points. Come on. Come on. Oh, that's frustrating. So for this to actually start a bullish move, I want to see a hold right here. I want to see a hold right here. If this kind of area goes, that was just a retest. Let's see if the bulls can actually do something. Short at 851, took 30. Nice. Good job. Man, they're tempting me to try that short again. This is one of those areas where you got to just wait and see who's gonna take it. I'd love to see the 730 area get tapped, but that might have been the bottom, the 750, 760 area. All right, good hold by the bulls. Good hold by the bulls. Look at that. Now let's see if they can tap this 875, hold 840, and continue. Yeah, they need a miracle. We got to get some kind of retracement though. Maybe to 30K. All right, there we go. There's our bullish close. This one is very questionable, but I'm going to try an 840 long. And if this does push out, I'm looking for a 920 touch and then a 880 retest. All right, take it easy, blank. All right, there's the push out. So bulls doing what they're supposed to do. $920 is target if you're in longs. I'm actually going to move my own share up to 960 to 860. I'm curious if the bulls can actually continue this. The count is back, long printed. You're wild. Quick scalp of the rejection. There you go. You're a machine today, James. Oh wow, there's that like 920 top right there. Did not get the fill for the long. I'd love to see this run all the way up to 30K. All right, there's that. There's 920. All right. All right. Let's see if we can just pass the zone and try to chase it. If we can get a nice little push out of this 920 area, I'll bump my entry up around 915, 920. This is a 1 minute chart day, guys. Wow. God, I'm reading these longs so correctly. I'm just not being able to get in and get in. All right, entry 916. Let's chase it, team. Let's chase it. Should probably be layering into these since I'm not getting my fills. This one will get filled. Printed 900 bucks. Past the eval. Let's go, vodka. That's how you do it on a Friday. My man was down and he came back. All right, come on, give us this fill. There we go. We should be in. All right, let's pump it to the moon. All right, boom, 200 bucks. Let's freaking go. Oh, and it's gone. Gotta love it. Come on, give us this just nice push out. Break over 940. We are solid. Take your money whenever you want on this, guys. Just because I'm going to hold through this drawdown doesn't mean you have to. That was 200 bucks in a second. And I want to see a 900 hold for this, honestly. If it breaks 900, it's running right to 880. It's moving in this area, though. I'll tell you that. Hey, buddy. Oof. All right, we might have taken an L on this one. Yeah, 880 would be a nice long entry. I agree. That's where I had mine earlier. All right, I'm going to hold this, and if this doesn't bounce here, I'm taking a fat L. Just got knifed. Yeah, we're going to have to take this L, guys. That's a bummer. Saw the first PT and then just nuked it. This long setup looks great, though. This is going to come back to my 840 entry. Watch this. I think the account failure probably just means they closed it to give you the next one. I want to try longs again. $880. We're going to get this fill very quickly. All right, we're in. Now we want to push past that 920. And there we go. Beautiful quick reaction. We're getting the reactions we want. We're getting that quick $100, $200 every time. This whipsaw is just fast. If this model fails, I don't like the morning at all because this is my favorite setup of all time. If 840 fails, this play is 100% dead. This is 15 minutes. Oh, man. Yeah, we're going to go further down. All right. Nah, definitely red on the session now. Oversized, the blue sky buffer. Oh, bummer, man. Jesus, this is I'm getting cooked right now. Yeah, we gotta take this out. That was a fake out and a half, guys. All right, at this point, bring me down to 730. Bulls are showing me they're just not it right now. And if this 840 holds and pushes out, and I just got faked out twice. Because that was a beautiful, beautiful bullish setup right here. All right, let's ride shorts down. Try like 850-ish, 850-ish shorts. Actually, I'm tempted to layer in like 840 and 860. Yeah, let's just keep 850. That was nasty work by the Bears there. Yeah, candle size is massive. Agreed. It's hard. It's hard to hold through this drawdown. And trying to get out of these positions, like when you see the $200, I didn't even have time to click the sell button. I guess if you had auto brackets. So if we do get tapped into here, the target is like 760. Definitely interesting morning once we the Bears kind of gave up a little bit, gave up some gas. All right, these 30-minute candles are about to print. What are we looking at? Yeah, hard to argue that's bullish. I'll tell you that. So it just printed. Pretty clear bottom at the 770, 760, 770 area. Let's see. Yeah, Judge. I mean, it was bound to the bear day was bound to happen at some point. Just good luck timing it. That 600 short yesterday afternoon was so clean. I'm glad the BluSky team caught it. So this 840, 850 area is where bears really need to defend, and we'll see what happens. All right, we should get tapped in here. If I get smoked again, I might need to take a little break. Take your quick money if you want. There's a quick $100, guys. Like, that's been the name of my trading this morning. 100, 200 bucks, and then it reverses on me. So I want to see this get under 40 now. Trying to get a play I can actually hold. The one to hold was 968 short earlier, honestly. Still be holding it. All right, so TP1 is hit. Let's see if it's gonna bounce or not. There's the bounce. If this gets over 870, it's done. This is tough right here for any holds. Made a higher low right there too. Let's see. Yep, this play is going to get smoked as well. 3 L's in a row. Damn, who is this? Ooh, that was so close to getting stopped out. I just need a knife through this 840 area, guys, because this play is not looking good. That 840 area held too many times. And now we got a buy model on the 1 minute. Yep, this play is cooked. All right. Need to, I'm going to take this loss in like 1 second. I'm not seeing any structure, so. We're going to have to wait and be patient for the rest of the session. All right, we're out. We're out. She's just toying with me right now. These 75-point candles are killing me. So every play I've taken, I've gotten my TP1, and then it just smashed me. Yeah, these Fridays ain't no joke. Yeah, see why Mike takes them off, right? Here's our friend 920 again. I want to just catch a damn play where I can actually hold it for more than 10 seconds. But that's kind of it right now. And guys, if you want to get take advantage of that sale tea time, I believe it ends today or tomorrow. But code tea time for the Propel plans. I mean, lower highs, higher highs. Let's see if we get another one. I got eyes on this 968 again. The same entry we took earlier. This is kind of a double bottom, I guess. I don't know. Definitely doing a little bit of over trading this morning. Trump just said stocks should go up. That's hilarious. A couple of minutes ago. Was that as I was short? Yeah, he did. Got Trump, guys. Jaja, you gotta warn me about this these Trump remarks. Get your crystal ball out. I just love that. Stocks should go up. It's like he's not even chatting; he's just posting on social media. So good luck trying to time that one. No, it's worse. It's worse when he just randomly posts. All right, we're in. If I get tapped out of this, like I might be done with this account for the day. There's just no continuation. Trump is hilarious. He can't. Yeah, he can't go one day without doing something. So this is again my favorite setup. If this fails, that just means the structure's not working, my strategy's not working, and it ain't my day. Wow, guys, this is tough. I'm just getting chopped to pieces. Straight up. That was a Hail Mary tweet, right? I'm just getting destroyed in this range. This is straight barcode action. Close over 920 would be great. But right now we're not getting anything. I've had 45 minutes of straight chop that I've been getting destroyed in. Like this would be an ad area, but we could easily run down to 840, and I just don't want to nuke my account. I'm still going to be slightly green on the week, even with this, but not by much. Where bulls cannot hold structure to save their life. All right, another L. Another L. Who's enjoying me getting cooked by the market right now? So at this point, I'm going to wait for 15 minutes to give me something. You got DLL 3 trades ago? Yeah. I definitely see that. I'm sure you're not alone. So I'm not going to touch this area. I mean, I keep trying both sides, and I'm getting smoked. We hit the 968 short. That was the play. Should have just called it. And while we're chopping in this little area, I'm going to go grab a cup of coffee. So I will be right back. Be safe, guys. I advise this. All right, so we are still in this little area that I don't want to mess with, not at all. NQ chose violence after that initial drop. You had about 15 minutes to hold today. Anything other than that, you're getting pretty destroyed, as you guys are watching me. Well, that's part of the game. These days are gonna happen. And like looking back, we dropped 700 points. It's kind of we're either gonna rocket ship up or just rebalance. And bulls are nowhere to be in sight. So if you did fail an account or anything like that today, this is the kind of price action that's gonna blow your accounts. Did I ever struggle? Yeah, I'm struggling with it right now. Struggling with it right now. This is one of those things where it's tough being a streamer because realistically on a Friday after making $300 in a play, I should have just walked away. But I'm here and I'm staring at the chart, and that is one of the highest reasons for why I ever revenge trade is because I'm looking at the chart. I want to go long too, Vodka, but I've been stopped out of longs 3 times. I've gotten my PT1 on every single play, and then it's gone red. Switch account. Yeah, should we just switch to evals? Should we YOLO some evals? What do you guys think? Friday YOLO evals? It's not a bad idea. Eval Fridays. $7.11 buy. Didn't you say that number the other day too? I think. Can't remember. All I know is I'm happy the weekend's starting. I've had a very, very long week, guys. Anybody have any fun plans this weekend? I'm going to a costume party tomorrow. The theme is Florida witches, so I'm going as Jimmy Buffett, and I'm holding a broom. So I'm a Jimmy Buffett witch. My rule is evals on Friday. That's not a bad idea, man. Yes, it's just a Tuesday. We got the hourly close about to hit. The hourly's still bearish as hell, guys. If we close below 820, we should get more downside move. The only thing is we've expanded so much to the downside. It's hard to trust shorts. Hard to trust anything in this zone, obviously. I'm just getting smacked around. And guys, this is the second full week of BluSky TV, so I think we've got this pretty down. Mike should be back next week, so we'll have a full schedule all day, start to finish. Should be good. And we're just going to continually grow. God, look how choppy this is. Like just based off the hourly chart, I'd be looking for shorts. And these 30, look at these 30. This is what I got chopped up in, guys. You see these 30-minute wicks? Disgusting. Somehow dug my way out of my FOMO trench last night, and now 500 green. I'm over it. I'm over this volatility. You guys make some green. Yeah, agreed. This is gross. I'm just not convinced of either side right now. I mean, this could be like a really ugly flag just for more downside. But I just got wrecked. I've been getting wrecked in this area. So if you want to play the flag and it's going to break down, this is your short right here. And then, but I've taken the same play 2 or 3 times and gotten smoked. Caught 16.20 off morning shorts. There you go. What's up? We got a couple minutes to this hourly close, so I want to see if it closes under my zone. Just took a 6K loss on options. Don't sweat it. Yeah. Yep. Did it for all of us. Yeah. Breezy and I are taking L's for the team. Stop smoking. This is just gross. Yeah, good point, Tina. Just one of the 250 days. They're not all going to be good. All right, here's the close. It's going to be smack dab in the middle of this mess. Potentially power hour. We are spread very, very thin today, coach wise. We're stuck. We're stuck right now, guys. I'm curious if this is going to break down or not. All right, looks like the flag is finally broken. Well, there it is. It's finally going. These guys. Look at that hour. This hourly is. If today was normal, this would break down. He should be. No, he should be back. He should be back. Yeah, I mean, this is really an eval day, or just start your weekend early day. I really want to just take longs today. Once we break out of this BS 920 area, that would be my like play if I'm waiting, because this ain't it right here. It's beer 30. Yeah, no kidding. Our 50K and our 200K static are our most popular. But if you go on the website, all the rules are pretty clearly laid out. All right. Well, here's the break of the flag. Let's go. Let's see. I'm gonna try it one more time, guys. One more time. 820-ish area, 820-ish area, 820-ish area, short. 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 820 But the 50K and the 200K are our most popular. Risky entry would be 800. All this time just for the hourly candle to close and then drop. Got about 20 minutes left in the London session. Again, I'm still looking for the 730 that I was looking for earlier. This has just been a trappy area. If you look at the 15-minute, you can kind of see it just back, forth, back, forth, back, forth. Entering only if 780 is broken. Yeah, that's a tough area. It looks like it's going to break now. I'd be very surprised if it doesn't. But I'm not just going to hop in just based on my last two plays. Yeah, right. Breezy. I feel like I've been sitting here for like 3 hours. It's only been an hour and a half. This afternoon might be good. I don't know. We'll see. But this range has been rough. You basically had 15 minutes to take your like directional move, and then after that, good luck. You were taking, 30-second scalps at most. I mean, these are 3-minute candles, and it's 63, like 60, 70 points on these 3-minute candles. But this looks like it's going to drip on down to the 30 area. Yeah, she's slowly dripping down that 730 area. No real entries in here, though. Maybe 775. Still in with my one micro short I entered yesterday evening. Dang. What's that, like $1,000 on a 1 micro? That's wild. I'm curious if they can bring it down to 675 today. All right, there's the drop. There we go. Finally, they just had to chop me to pieces to give the move. About 15 minutes left. 15 minutes left in the London session. $1,200. Geez. I'm not even sure if I'm going to get another trade in during this. Like we are 200 points above the average daily ranges. Yeah, Breezy, I agree. The market has needed this pullback. All right, there's that 730 target. It officially hit. Curious if we can get a bounce here. We might just die. I think we're just going to die. If they did it 20 sessions ago, yeah, right. This is needed this for a while. What's the daily look like now? Oof. Look at that daily, guys. Look at that. 1, 2, 3, 4, 5, 6. Wiped out like 5 days of price action. We're going for the gap. We're going to get it, which is wild. The market has needed this pullback though, 100%. Yeah, Tina, I'm curious if it gets to 675, if it's just going to blow through and fill the gap or not. But that would make this day absolutely crazy. There hasn't been like a real catalyst for it either. Curious if we push back to the 775 area. Oh, NFP, yeah. But Trump said stocks go up. So why is it dropping? That's true. I totally forgot about NFP this morning. What was the numbers? Did they miss? I mean, this is just clearly incredibly bearish, guys. The Bulls had their chance and they just couldn't do it. But they tried with creating all these wicks. Expected 85. Oh, wow. See if we can squeak in one more play before I hop off. Probably shouldn't, but let's see if we can do it. I'm eyeing the 75 level. Thanks again if you stuck around this long. It's been a tough session. But bear target was hit. This is wild. Yeah, it's a pretty solid week overall. Can't complain. I got to figure out what to do on stream when we're just chopping like this. Like, do I literally just take 10-second plays? It's a tough one. Yeah, I agree. I agree, Breezy. That's why this was my bear target, 730. If you're wondering why 730 is a major target, go to May 14th, 4-hour chart. That's why we have a level there. Didn't get filled on that. Yeah, 8-second plays. Well, that's what I don't want to do, because if I take the play, I get 25 points real quick and I sell it, it's going to be back to break even by the time you guys see it. And I don't think that's fair. All right, just lose the floor at this point. All right, I'm gonna do a super aggressive entry at 7:44 to close out the stream. See if we get filled and then dump. Yeah, I'm just trying to figure out how to fill the time. I don't know. Play some games or something. Because I can scalp. I mean, you guys see I can scalp, but it's going to be so hard for you guys to follow. I don't know. Maybe we'll try a scalping session, see how it goes. I can tell you guys my horror stories about trading, my worst days. Oh, damn it. All right. We're going to go 732. Let's get this fill, and let's just dump it to 675 very quickly. we can that would be fun. We can talk about it. I used to slam 0TT options at 9:30 on the dot. Oh man, how do we not get in? All right, give me a pullback so I can get in. Okay, we're in. If this rips, then this is just not my day. All right, so like there, that'd be the quick scalp. I'd be out. And now you guys see it. Come on, run this baby to 675. Give me a nice win. Like, do you think you guys could have followed that? That quick $200? Because if you can, then we can scalp the hell out of this stuff and just print. All right, 700 break. Let's go. Come on. $700 was like major TP, so that's been hit. Let's see if we just die. Just give me a play with follow through. That's all I'm asking for. Yeah, bears are on it. No kidding. Except when I'm in the play, then they stop me out. Just need the 700 to lose the floor, and this should run pretty quickly. Take it easy, breezy. Have a good day. Hope it goes smooth. Yeah, I love Fridays. So wiki down here. All right, we're back to break even, basically. Yeah, Bulls took the day off. No kidding. No kidding. I've just seen so many 25-point plays go red today. It's not typical. Bought 700, not a bad idea. Got a couple minutes left in this session, guys. I'm hoping we continue downwards for my short stake. Seen a few 100-pointers do the same. Yeah, today was that range was nasty. That's all I'll say. Absolutely disgusting. All right, lose this floor. Pay this man. It's nothing worse than seeing 100 points go to zero, dude. I hate that. This should dump. Or it's just gonna rip and stop me out. This is bleh. I know it's going down, but it keeps drawing me. Yeah, drawing me down first, right? That's what I'm saying. I mean, I was up almost 30 points, and now I'm red, which is pretty wild. Rough day for holding, unless you got in early. Incredibly rough day for holding. And this is what I was talking about earlier. Should I have taken that $200 and just gone off and done something? Or do we hold to see if we actually get the directional move that should happen and risk getting wicked out? Which, as you guys have seen me get wicked out about 5 times already. And guys, if you ever want to learn something while we're on here, ask away. I know pretty much every strategy out there. All right, dump this. 700, get out of the way right now. Come on. I know almost every strategy, but I like my simple strategy. I keep it simple. This thing wants to go. It just won't. Look how flat this is since I got in. This is what you would call a little demand zone if you're looking at like the 1 minute. This area right here. If we can break through that, game over. But until then, it's going to bounce. I'll stay on until this play either goes red or hits target. And based on my luck today, it'll be going red. Yeah, down there, Eric, is where my like crazy target would be. Another brutal hold. And guys, we will, of course, be back next week with a full schedule. Just go down already. This is ridiculous. All right. Well, it went red. It was worth a shot, guys. I hope you enjoyed watching me get absolutely annihilated by NQ in the chop zone today. But until I guys see you next time, stay profitable.
Blue Sky Technical Lab. This is Coach Matt, ladies and gentlemen, and I got a pretty interesting topic here today to discuss in the Technical Lab. Something near and dear to my heart, something I love talking about, love trading, love breaking down, love doing, and that is a good old-fashioned reversal in the market. And reversals can take a lot of different shapes and sizes. We're going to talk about the different ones. We're going to talk about the types of things we want to see as we go through a reversal analysis. But if there's one thing that I believe that most traders love doing, it's catching a reversal. The earlier you're in the reversal, the better opportunity, the better the reward to risk ratio, the better the probability. And so understanding reversal analysis is as much art as it is science. You know, when you're talking about a confirmation of a trade, for example, it's all math. 2 + 2. Does the candle get above the high? Percentage of the ATR above that level? Let's giddy up and let's go. There's a simple process, mathematical equation when it comes to the execution of your trading systems. You have levels, breakouts, retracements, all these different patterns. But in general, I think one of my favorite patterns in the market, because not only is there a good reward to risk ratio perspective, but how I feel about it is really, really simple, guys. As a trader, I'm not just looking to catch a trade. Oftentimes, I'm looking to start with that in mind. Hey, let's just catch a trade. Let's go level to level. Let's do the same things everybody else is doing. But I love catching trends. And the very beginning of a trend is the exact point of the ending of the previous trend, and that is a reversal. Now, reversal patterns and continuation patterns are extremely similar to one another, and that's where the art really comes into equation. That's where the breaking down of the step-by-step process as you understand a reversal formation can be really, really, really powerful, because oftentimes in the early beginnings of a reversal are the exact same things as what is called a continuation pattern. And so you have reversal formations that reverse the previous trend, and you have continuation patterns that continue the previous trend. And so what I want to talk about today is specifically those patterns that form up the reversal situations. And so technical reversals are simply a pattern that changes that ends the previous trend and is the beginning point of a new trend. Whether you're talking about bullish reversals or bearish reversals, it's not like you got to learn completely different patterns for the bull reversal as you do for the bear. For every bullish pattern out there, you flip that chart upside down and there is an equal and opposite bearish pattern. So for every M formation, you have a W formation. For every head and shoulders, you have an inverted head and shoulders. For every V-shaped recovery, you have an inverted V-shaped recovery. Now, those are the core three. There are three core reversal formations that we track. You talk about V-shapes, W formations, and head and shoulders. You talk about head and shoulders, M formation, and V shapes. They're three core, three for the bull, three for the bear. There are fractal patterns within reversals, but we're going to talk about the core patterns. We're going to talk about where to take action in those core patterns. And I also think there's been some pretty decent case studies this week, including one yesterday, one on Tuesday, and one on this morning, quite frankly, that we can break down. And I felt like the reversal topic today was a very, very, very important topic to understand, because when we look at the overall market right now, a lot of this is about kind of your personal expectation. But when you come out and you look at the overall market from a little bit of a bigger picture perspective, you can kind of see how the market has been trending very, very, very well for a very long time. But what that's also done is gotten to the point where we're seeing general overextension set forth in the market itself. And when we're going through a little bit of general overextension, a lot of times in the backdrop of that general overextension, you see daily patterns form up that are more consolidation based. And I talked about this earlier in the week in the power hour, but as of right now, I got the NASDAQ and the ES as a daily consolidation pattern. And as you're going through a daily consolidation pattern, what you see oftentimes on the intraday is neutral ranges. You see these neutral ranges set forth where the market's going to go up to resistance, back down to support, up to resistance, back down to support. And as the intraday plays out that way, goes down to support, up to resistance, down to support, up to resistance, what that creates is the backdrop of neutrality on the actual longer term side of the equation. And so when you're looking at neutrality in the ES, and I'm talking neutrality on the intraday side of the equation, the daily chart is still in a bullish uptrend on both the ES and the NQ, but we're starting to see overextension on the daily chart. We're starting to see hesitation on the daily chart. We're starting to see a little bit of consolidation on the daily chart. We're starting to, I mean, my goodness, today we got Broadcom. First AI name in weeks with a negative impact on earnings. First time. And in that first time, we saw rotation go from NASDAQ to the Dow Jones. We saw rotation go from technology to finance, from technology to industrial, from technology to, there was another healthy sector we were seeing rotation, finance, industrial, and healthcare were the three. So we saw rotation a little bit from the very top of the market to a little bit of the bottom areas of the market to shore up that. By the way, that's a pretty standard bullish like condition where top areas of the market see rotation, profit taking, and they flow into bottom areas of the market that have not seen a lot of pump in the last little bit. So we're seeing a little bit of those early sector rotation models play out right now. And as such, again, what we've seen kind of impact on the top end of the charts, and I'll just kind of show it to you here and toss very quickly. But when you look at the top end, well, what are we starting to see here? We're starting to see a little bit of slowing momentum at the top. We're seeing a little bit of consolidation here. We're seeing battles here that we did not see in the early innings of this wave. We saw battles here that we did not see in the early innings of the wave. And so you're starting to see the top end get dialed in on the overall S&P 500. You can say that same thing on the NASDAQ. And what that's done is create a neutral condition in the backdrop of the intraday charts that we love to trade and love to stare at. And so I just felt like today talking about reversals, because as a swing trader, reversals are a little bit rare. As an investor, reversals are rare. They take a lot of time to really dial in. When you're talking about reversals on an intraday side of the equation, when the daily chart is going through consolidation, we could get these things multiple times every day, quite frankly. And so that's kind of what we've seen play out. I felt it was a pretty good topic to discuss here today. I also want to talk a little bit about RSI and MACD and talk about it through the lens of divergence, because in a couple power hours earlier this week, we had a conversation on divergence, and divergence can be a very powerful 1-2 punch. When you're looking at the reversal play out and you're trying to determine, is this a bullish reversal? Is this a bearish reversal? Or is it a continuation pattern? And we're having those technical debates in our head. I'm pretty sure all of us do. Every one of us, if you have technical debates in your head, let me know in chat, because I certainly do every single day. Is that a reversal? Is that the clean level? Is that this? Is that that? Let's go through the process. Well, one of the things that can help me understand the quality of a reversal versus continuation is MACD converging or is it diverging? Is RSI converging or is it diverging? What do those secondary indicators tell us to help us understand the context of price action? And Jaw, I'm right with you. Those voices, we got the angel on the right shoulder telling us one thing. We got the devil on the left shoulder, and our, trading is really done between the 6 inches between those two voices, right? You got the left shoulder, you got the right. You can also put it like this, Jaw. On the right-hand side, you got your creative minds. You got the creative side telling you certain things. On the left-hand side, you got the analytical voice in your head telling you certain things. And that's what you're trying to comprehend between that 6 inches between those ears, is to understand the context of that analytical versus creative conversation. And so Market Mamas, i.e. Coach Becky's the one who gave me that little thought up there, but it's that context that the indicators can give us to help us understand what are we really seeing out there. Because a lot of times in reversal, there's a shift in momentum. And when there's a shift in momentum, certain traders are going to see that through the lens of bullish continuation. Other traders are going to see that through the lens of bearish reversal. Where's the truth in that? Because great technicians can disagree. Where's the truth in that? Well, indicators can help us understand that context. And so I definitely want to talk a little bit about divergence as well here. And so when I'm looking at things technically that make up the hallmarks of reversal analysis, there's certain things that occur from a technical perspective that makes you start thinking about reversals before the reversal even occurs. And I know every single one of you have done that. I certainly have. We have our level, we have an opinion at the level, and we're like, yep, that's going to reverse at that level. Well, that's your opinion. Your opinion doesn't matter to the market. And I know that's tough to hear, but guess what, guys? The market doesn't care about my opinion either. It doesn't care about any one person's opinion. The market's too big for that. And so it's, you have an opinion, but does the market share your opinion? That's what we have to really kind of focus on, is understanding the process that the technical analysis goes through to help us get to that ultimate confidence on that reversal. Because you're in a reversal, guys, you're going against the trend. You're saying this is the end of the trend and it's the beginning of the next trend. That's what you're saying. Whether you're right or they're wrong, the market's going to have a say in that. Well, everything that goes into a quality reversal, you don't need everything, but these are the things that you typically like to see to give you that confidence in a reversal. Number one is, and I don't have it here, but I will just say this as a day trader. Number one, high quality level. Like you're typically see reversals. They typically don't come out of nowhere. They typically don't just happen through a catalyst, because in a catalyst event, you typically see what we call a V-shaped recovery. And V-shaped recoveries from a trading side of the equation, I don't want to say it's a new pattern, but it's certainly a much more popular pattern over the course of not just, the headlines we get on an intraday side of the equation due to the Iranian conflict and presidential updates on that side of the equation, but it's been a pretty compelling pattern ever since the pandemic, quite frankly. And so before the pandemic, I really felt there were two very important reversal patterns. You had the M formation and its cousin, the W, and you have the head and shoulders formations, both the head and shoulders and the inverted head and shoulders. Post-pandemic, we do see more V shapes. And as algorithms become a more important factor for the market, we see more V shapes. And as AI platforms start to come on and the speed of the market increases even more, we will most likely see more V shapes. And so the V-shape reversal is typically a reversal that is driven through a catalyst. Whereas the other two, the W and its cousin, the M, and the head and shoulders variety, those are more traditional, more standard technical type situations that also have some time factors to them. V-shapes quick, the other two not so quick. And the reason is because to create a high quality reversal, It's not just about your level. Your level's number one, absolutely, but it's not just about your level. It's about the momentum coming into your level. What's happening with trend momentum coming into your level? What's happening with the pivot formations within the backdrop of that reversal? The pivots, momentum's going to tell us a part of that story. Pivots tell another part of that story. And so when we're talking about a high quality reversal, such as an M, a W, or a head and shoulders, there's going to be a time factor in that because you have to have pivots. And pivots have minimum time durations to them. For example, you can't have one candle equate to a pivot, or every single price point in the market would be a pivot, and it would drive us more crazy than social media posts. And so we want pivots have minimum durations to them. You have to have a minimum duration of 3 bars within a move to create a pivot. So these are the early stories when you're talking about a reversal, is you're talking about understanding the concept of momentum. So it's all about the level. That's number one. Where's your level? Is it a multiple time frame level? Has it been tested many, many times? How high quality is that level? Number one. Number two, what's the momentum going into that level? Are bears losing momentum coming into a support? Are bulls losing momentum coming into a resistance level? That momentum is going to tell a little bit of the story. But at the end of a technical day, nothing tells the truth like a pivot does. Because when you talk about a bullish uptrend team, pivots increase. Resistance gets broken constantly in an uptrend. Resistance is the number one thing that gets busted up in a bullish uptrend. Resistance here gets broken. Resistance here gets broken. Resistance here holds. When resistance holds, that trend is over. You should not be relying on that previous trend the very second resistance holds, because it's no longer part of the equation. Once resistance holds, you are now firmly entrenched in some degree of neutrality, and that some degree of neutrality is going to depend on whether it's a bullish continuation or whether it's a bearish reversal is going to be what happens next. And so in the early innings of reversals, it's really about momentum, and it's really about understanding pivots. And so when you look at momentum team, momentum can be looked at through a variety of different lenses, obviously. The type of momentum I'm talking about right now is not necessarily candlestick momentum and catalyst momentum and bar by bar trading and high bases or flags, or I'm talking about trend momentum. When you start to see waves decrease in their ability to go up, you're seeing momentum shift. And so as if a market goes up, say 20 points, and then goes up 10 points, and then pivots at 10 points, you're seeing momentum shift. And so when you're looking at momentum, you can track this through 2 different varieties from a trending perspective. Number one, you could look at it from a breakout to the next resistance. So a market breaks out, how far does it run above the breakout channel? If in wave one, or in example one, you run 2 points and then you run 4 points on the breakout, that's a sign of bullish continuation. So if you have increasing momentum going into a resistance level, you're not exactly going to be looking for a reversal there, team. The first thing you're going to be looking for is a bullish continuation pattern, because bulls have momentum. You never want to fight that momentum. You never want to go against the market. You always want to trade in the direction of the prevailing momentum. And you definitely always want to trade in the direction of the trend. And so when you're looking at the momentum, the first thing you look at is kind of resistance to the next level of resistance. How far can it run before it gets tired? And I think that's a great point, Nacho, because it's also about understanding the consistency and the volatility there. Are we dealing with a sprinter, and we got to be a little bit more aggressive, or is this more a methodical walk around the park type situation? You know what I mean? And so momentum is going to be a very interesting situation, but you look at it from resistance to resistance to resistance. And if resistance is expanding, those bulls are feeling froggy. they're feeling froggy. Whereas if momentum starts to contract, you're seeing the opposite impact. They ran a sprint, Nacho, and they got tired. So for example, I'll give you another analogy. Team, if you got up outside your chair staring at these amazing computer monitors that all of you guys stare at, and you went outside and we all touched some grass for about 5 minutes and we ran a mile as fast as we could, would we get a little tired? Would we want to put our hands on our knees a little bit? Would some of us maybe want to take a nap? Like you're going to get tired. And markets get tired too, guys, because markets, we're looking at the collective emotion and pricing of everybody in the market. So as the market runs 4 points and then it runs 2 points, I'm not going to suggest that the market now has the ability to run 2 points when it just showed me it can only run 2 points. And so the market shows that to you through the momentum shifts. And so you have increasing momentum, which puts you on the radar for bullish continuation analysis. And then you have the opposite impact of that, which is slowing momentum, which gives you the understanding that the market's getting exhausted. The type of momentum we want to see as we're coming into our level that we want to see through a reversal lens, we want to see slowing momentum. Now, the second way to determine momentum, again, indicators can help us understand the concept of momentum, but I want to look at indicators to give me the initial read of momentum. I always want to do that from a price perspective. I don't want to pull up secondary indicators just to make sure that, well, what does my indicator tell me about momentum? You can read momentum on the chart. You do not need an indicator to tell you about momentum. It's very clearly established on the chart. You can see it through through resistance levels expanding. You can see it through the natural Elliott wave cycle of wave counting, and from the support pivot to the resistance pivot. You don't need a secondary indicator to tell you what's happening with momentum. But what the secondary indicators can do is confirm your natural read of the momentum. So if we're talking about coming into a major resistance level on the intraday side of the equation, and I have an opinion there, I want to make sure that we're getting a decreasing momentum environment to show me that those bulls are getting tired, that those bulls can't carry anything any longer. And then when it double tops here, you start to see the ending of the trend. And so when you're talking about momentum is that early warning sign to helps us understand if the level is going to give us some reversal analysis, or if that level is going to give us some continuation. Increasing momentum going into a resistance level, I'm going to be looking for bullish breakouts. Decreasing momentum going into a reversal into a major level on the intraday, I'm going to be looking for reversals at that point. Right now, I'm looking for more reversals than anything on the bullish continuation side of the equation or bearish continuation side, because the market hasn't proven it can break out on the daily chart. And if the market cannot prove it can break out on the daily chart, what am I thinking it's going to break out on the 1 minute chart for? And so until this market breaks out, I kind of feel like reversals are going to be a really good pattern. And that breakout might take 3 days to occur. That breakout on the daily chart might take 3 weeks to occur. I don't know. It's our job to trade what we see and not complain about the environment we have. So once again, you have 3 basic reversal patterns. You have the double top, double bottom. That's the M and the W. You have the head and shoulders, which is the head and shoulders or the inverted head and shoulders. And then you have the V shape and the inverted V shape. Now, when you're looking at the double bottom, double top, guys, it's very simply put a holding of resistance or a holding of support. Once support holds, once resistance holds, and we have equal pivots, we are absolutely hunting the double bottom or the double top. So if the pivots in a reversal are equal, this is a traditional reversal type situation. If the pivots in a reversal are offset, it's either a head and shoulders or a V shape. And so when we're talking about the cleanest reversal patterns out there, they're going to be the ones that pivots tell a very clean and compelling technical story. Because if it gets dirty from a technical perspective, it's going to take a little bit more time to clean that up. And so when you're talking about the reversal situations like a W formation, what you typically see is the market's coming down, 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 and typically it has a little bit of momentum. And let's say we have an opinion down here where you have a major support level. Well, you have the contract goes from all the way up here to all the way down here, and then it starts doing this number as it gets into support. Well, as you start to see that play out, where the waves get contracting, and the expansion of momentum from the breakout of support to this support level starts contracting, that's the sign of momentum shifting. And that's very important, guys, because if the momentum doesn't shift here, you're going to see something where it's more like this, where it becomes a little bit more difficult to process, I would say. And so as you get the momentum shift coming into a key level, at this point, it's really about understanding how that story gets told. And so that first pivot that establishes the support level, that's not this level we're trading off of, guys. I know some of you love to put a limit order down at a level that you have a strong opinion on. I'm not saying anything negative against that. I'm just saying that's not a reversal. That's not a reversal pattern. That is, you have an opinion at a level and you're trying to maximize your reward to risk ratio and you're giving up probability to do it. That's a different philosophy. It's not a reversal. You're doing it a little bit different. And again, I do it too. Everybody does it. You have an opinion at a level. You want to maximize your reward to risk ratio. And as you maximize your reward to risk ratio, you're going to give up your probability. Because if you're going to have a cheap risk, big return opportunity, you never have probability on that. That's 2 + 2 when it comes to market mechanics. Every time you have a higher probability in the market, you're going to have a little bit less of return. You're going to have a less return, bigger reward to risk ratio. Anytime you have a low probability situation, you typically have a little bit more return to get, but you're not going to game the system that is more effective and efficient than you are, team. And so if you're putting an order at a level, again, I'm not trying to talk down that in any capacity. I'm just saying that's not a reversal. That a reversal is tracking a reversal formation and waiting on confirmation on that reversal. And so and you only get a proper reversal with pivots. And so the first pivot that gets established, that's just telling you that support level is a viable, great support level. You come back up, and then the very second it holds that double bottom, at that point, that trend's over. The previous trend is over, and we have a new trend. But we do not know what the next direction is yet. Because let's say something like this occurs where the pivot holds, comes back up, but then constantly decreases resistance. If resistance is constantly decreasing, you don't have a reversal, team. You have a bearish continuation pattern. It's the pivots that tell the story of the difference between a reversal and a continuation pattern. So support holding is kind of step one in the formation of a reversal. Step two would be to understand what happens at resistance. Does it come all the way back up to the previous area of resistance? At that point, you have equal pivots at resistance. You should be looking for bullish breakouts. You should be ready for any time you break back up, because at that point, you are starting a new trend. Whereas if you decrease resistance against the backdrop of that reversal, once again, bears still have control. It's the pivots who tell us who has control. And as the bears had control throughout the trend, and then they had control throughout the pattern, they should have control in the next trend as well. And so it's very important for us to see that come back up into resistance and then break out of resistance, because the breakout is what establishes the trade, and the breakout is what establishes that next trend. The head and shoulder formation is a little bit different, because the thing that occurs is you get your slowing momentum in the trend, and then it increases support. Once it increases support, you now see it through the lens of bulls have control. This is the first increase in support. Now it's just a matter, and I heard Coach Breezy talk about this the other day when he was talking about the neckline. When you get above the neckline, that's where the real trade is. And so if you're front running, you certainly like an increase in support in a front run, and that would be a viable pattern to front run an ultimate reversal. I like that a heck of a lot more than just buying a support bounce in a downtrend. And so you see that increase in support. That's a really good situation to front run that little move. Whereas the second trade is when it gets above what's called the neckline. And the third pattern that we talk about in reversals is the V shape. Now, the V shape is a newer pattern in the market. M formations, W formations, head and shoulder formations have been around for 100 years. V shapes are a little bit more new to the way we navigate the financial world. The V shape recovery is the right side of a head and shoulders formation without the shift of momentum of the left shoulder. So remember, a head and shoulders formation goes left shoulder, head, right shoulder, break out of the neckline. So literally tracks head and shoulders, knees and toes. Let's go. Let's sing some songs. But when you're looking at a 1-2-3 reversal V-shaped formation, you don't have the shift of momentum. Remember, these are catalyst-driven patterns on the 1-2-3 V-shaped recovery. And so you don't have any momentum shifts. It comes into a level, and all of a sudden it increases support and it lifts off. And so the 1-2-3 is a very similar to a head and shoulders formation without the momentum shift in the previous trend. Now, let's go talk a little bit about some of those reversals that we saw earlier this week. Now, when we're looking at kind of earlier this week, team, I kind of felt like there was a couple very interesting reversal situations that were brewing right here, and then obviously as we see up here at the top side as well. Now, when you're looking at this overall neutrality earlier this week, let's kind of look at it right here. When we're looking at this earlier neutrality this week, guys, this is the level right here at the 75-76 level, which is a very important level for the S&P 500. It was a breakout level today. It was a reversal level earlier this week. It was a breakdown level with a tremendous amount of chop yesterday. It's a level that's been playing out all week long. On the flip side, the top side of resistance right now is 76.30. And so you had a range for the most part of this week between 75.75 and that 76.30 level. And markets for the better part up until today, and really kind of a little bit yesterday, just up to resistance, down to support, up to resistance, down to support. And I felt like here, this reversal here, more on the 1-2-3, comes down, hits resist, hits support, holds support, no momentum shift to the left side here. Let's get a little bit bird's eye view right there. So you see how this one here is just down, all the way down, straight down like a rock, down to support. Now, the first thing that we typically see in a reversal is a shift in momentum. If there's no shift in momentum, you're most likely going to see a V shape is what you're most likely going to see. And that's exactly what kind of played out here. There's no pivots here, team. That's consolidation. There's not an official pivot there. Remember, reversals have pivots. V-shapes are volatility events that are driven through catalyst. There's no pivots here. And so you hit support, consolidate, break up. That's your first signal. The pullback would have been your second signal. And then you see that momentum back up into resistance, come right back down. This second situation right here coming in, I believe it was on Tuesday of this week. This situation right here was a very, very good reversal. And it told the entire story very, very well. For example, you have a situation where you're coming down with some momentum. So you see kind of this level right here. So this is your initial move. This is your secondary move. Do you see how the second box is less than the first box? So when you're tracking momentum, you can either track from the breakdown to where it gets extended, the breakdown to where it gets extended, or you can track the wave itself. The wave goes from resistance to support. And so if you're just take one thing away from this conversation of momentum, there's two ways to track it just from a pure price perspective. Obviously, indicators and other things out there as well, but either the wave, meaning resistance to support, or the breakdown, breaking of support to where it gets overextended. However you parse it, whether you're parsing it through the breakdown to the extension, the breakdown to the extension, or you're looking at the overall wave, I think we can all agree that this is slowing momentum as we come into a key level of support. And so as we're coming into that key level of support here, this is where I personally start getting excited about reversal type situations, because as you come into that key level of support, I already have the momentum shift, which tells me that the bears are losing momentum. That's what it tells me. Bears are losing momentum coming into a key level of support. If I'm a bull, I like that. I like it a heck of a lot more than this type of situation where it's all a volatility nightmare, where it's a speed to the downside, consolidation without any pivot confirmation, without giving you any aspect of the story. It's just volatile. And people are saying, well, I think it's going to go up because we're closer to support, or I think it's going to go down. That's not system trading. That's not rules-based trading. You have an idea in your head and you go do it. That's not technical trading. This over here, slowing momentum, double bottom, double top, breakout, that is a reversal. This nice little W formation right there after the slowing momentum, confirmation candle, catch the 9 EMA on the 15-minute, and let's giddy up and let's go, go, go. That to me is a high quality reversal. This to me is a volatility nightmare. The difference is pivot formations. Pivots tell the story. Here, there's not one pivot other than the pivot at support. The next pivot is the increase in support. There's not a resistance pivot here. This is just volatility. This is a clean story because pivots. So one was a volatility nightmare. The other one was one of the cleaner situations we had. What was the telltale difference? They both had the same level. They both had heat coming into them. The difference was the momentum shift. You had a momentum shift coming into that level. And when you have a momentum shift coming into that level, the bulls are going to spot that literally without binoculars, without the sight. I shut your eyes off. You could trade that pattern. Literally, that tells such a compelling pattern. Now let's fast forward to kind of later on this week. So let's just kind of fast forward here. This is a bearish continuation. Why? At no point did you ever see an increase in resistance. And guys, we made that trade yesterday in Power Hour. Becky made that trade. I made that trade. We made that trade because we felt we were getting a reversal. Ultimately, the 15-minute chart never got back up into resistance, held firm, lowered its level of resistance, came right back down. So we were trying to get in front of that. We were trying to front run that larger reversal based on the lower time frames, but ultimately never reversed. We were just being aggressive off the low point. Again, I'm not trying to say you can't be aggressive coming from the low point. We were literally doing it yesterday. What I'm suggesting is it's not a reversal unless you have the pivots tell you it's reversal. And quite frankly, the only thing we had here was a little bit of slowing momentum, and we did get that quick reversal. Now, again, I'm talking on a 15-minute time frame. There was a high quality reversal in the 2 to the 3 minute time frame, but I'm talking a little bit more of the 15-minute chart, 5-minute chart, a little bit more my standard style. Now, you come into today here, and I felt like today was certainly a reversal, but there's one thing to add in the conversation here today on this high quality reversal today. Time in pattern. Let's talk about that very quickly. Why is time in pattern so important? Because where V-shaped recoveries are very, very difficult to trade. Time in pattern is it turns reversals into consolidation trends, into neutral trends. And when they break out of those things, they become pretty stinking good, quite frankly. Because the longer the time in a reversal, it plays for the bulls. Or it like at the top side, the longer the time in a reversal at the top side, it plays for the bears. The longer the time in a reversal at the low side plays for the bulls, because the bears had the edge coming in. They had the edge. They saw a shift in momentum. And now that shift in momentum here from what we were seeing earlier in the session yesterday, look at how it kind of flatlines here. Support holding, support holding, support holding, support holding. And what occurs there, team, is divergence. See, divergence doesn't happen oftentimes in V-shaped recovers and volatility events, because oftentimes the speed is too much. And by the time the move is done, the indicators haven't even caught up to that. But when you get quite a bit of time in the reversal, you can start to see other things get dialed in there as well. And one of those things that is an early sign for reversal analysis is the concept of divergence. Now, what divergence is and where it plays a role in reversals is when we have an identification of a reversal pattern and we go to our secondary indicator to confirm that reversal. Divergence helps confirm the reversal, because most of the time you're looking at indicators, you're looking for indicators to basically reaffirm your opinion of price. In a reversal situation, price is coming down, 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 but in divergence, you're seeing it start to go up, 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 because it's confirming the momentum shift is what you're seeing. That's what divergence really does, is it confirms that momentum shift to a certain extent. And so what divergence is when price is coming down, but the indicator starts going up. And it's really when you're looking at support. So support pivots are pressing down or equal. So divergence is support is pressing down, support on your indicator is pressing up. And so here you got support pressing down, support pressing up. That's putting a lot of pressure on those bears and for the bulls to take the edge there. And so divergence is an early warning sign. On bearish reversals or on bearish divergence, price is pushing up, resistance is going up, but what's happening with the indicator? It's going down. What's happening there, guys, is the momentum is shifting on the price and the indicators confirming that the momentum is shifting. You don't get divergence without a shift in momentum. And so if you're having a difficult time reading the natural state of momentum on the price perspective, which can be a little bit difficult because there is some degree of interpretation there, pull up your indicators, pull up RSI, stochastics, MACD, whatever your favorite indicator is, because divergence works pretty much the same on all of those core indicators. If resistance is going up in price, but the pivots in resistance are going down in RSI, that is divergence. Same thing happens on MACD. As MACD price is coming down, MACD histogram is already shifted, showing you that clear shift in momentum. And that clear shift in momentum is extremely important for me as a technician, because I might not be the earliest in the trade, because I got Jesse Livermore living in my head. I like confirmation. I like confirming patterns. I don't like being too aggressive inside pattern development. I like being aggressive as we break out of patterns. And so a lot of understanding the reversal is understanding the story that we're seeing play out there to put us in an environment where we're ready to take advantage of the break or the breakout when it occurs following the divergence. So you see divergence over here, price pressing down, indicator pressing up, ultimately price breaks up. Divergence here, price pressing down, support pressing up, ultimately a reversal, break back up. And so regardless of the indicator that you're looking at, divergence can be a very helpful tool in helping us understand the nature of these reversals. So let's go to the first one here, and let's just look at it from an indicator perspective. So let's go over here and let's look at RSI first. Actually, let's look at RSI first. All right, so price is coming down, 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 down. So far as price is coming down here, the indicator is doing nothing but confirming that. Now, as price comes back up, you got a slight increase in support right here. You have a slight increase in support right there. There is no divergence here. RSI told a very clean story of the price, but there is no divergence because the price and the indicator were doing very similar things. Well, let's look at over here in a standard reversal. You have a momentum shift here. So from right here to right here, what do we see on the indicator? We see it flat. As it pivots here, what do we see here? An increase in support. So when you're looking at divergence here, guys, kind of looking just kind of right here at RSI, right here, flat, price is coming down. Right here, pivots are equal, pivots up. That shows you bullish divergence. And when you see bullish divergence, you got to be ready for that breakout, because that's what it's giving you the sign about. Is it's giving you an early sign, because the divergence happens inside the pattern, guys. And so you see how we're going through that double bottom, double top. Confirmation is all the way over here. So you're going through a double bottom, double top, and then you see that first breakout. Well, we're already at 45 on our side by the time that first breaks out, which means when you see that early sign of divergence in the reversal here, yeah, can it still break down? Of course it can. Price can do whatever it wants to do. But what does the indicator tell us? What does the price tell us? What does the momentum tell us? It's trying to tell a story. And that story is not just what we like to fixate on sometimes as day traders and just look at the micro level and the micro analysis and the one candle and be so fixated on that one candle that we're missing the story that the market is trying to tell us from an overall technical perspective. And so I wanted to talk today about reversals for a couple reasons. We're living in an environment where we're going to see, in my estimation, more chop, more neutrality on the daily chart, more of a cash flow environment, in my opinion, in the leadership of the market as of right this very second. And so I don't expect a lot of downward pressure, honestly, unless some other catalyst comes out. I expect a little bit of consolidation at the top end of the market here. And as such, on the intraday side, when you see the daily chart get extended and the daily charts start to go a little bit neutral, that creates a lot of compelling intraday reversals to track. So I wanted to have that conversation here today in the lab. I hope you guys had a wonderful, wonderful time in the lab here today. I hope you guys learned a lot about how I see reversals and how divergence plays within the backdrop of those reversals as well. What does ServiceNow tell us? ServiceNow, from a divergence indicator perspective, it's confirming. It's confirming, Vodka. It's confirming. Bullish uptrend, increase in pivot. And so it's converging. There is no divergence as of right this very second when you're talking about ServiceNow. Divergence doesn't happen oftentimes within the developing trend. It happens typically at the end of a trend. Jaja, I need you to digest AVG earnings when you come back. We'll talk about that in Power Hour. Jaja, absolutely. I certainly have a take on Broadcom's earnings. One of the reasons, Jaja, I keep saying I expect consolidation at the top end of the market, that's a little bit of Broadcom's earnings. No lie. That's a little bit of Broadcom's earnings, because that was the first earnings report we've seen on the AI trade out of a catalyst stock in the AI trade to give us any degree of hesitation on the AI trade, which is the dominant trade in the market by a country mile. And so Broadcom gave us a little bit of an early warning sign there. By the way, I do not have a negative take of their earnings. It's very difficult sometimes to achieve high bar expectations in the market. And I would certainly say Broadcom is suffering due to that. But we'll have that conversation in Power Hour, and we'll be back with Power Hour and more from BluSky after we get redialed in and we come back with an awesome conversation for Power Hour. So team, if you need, this is a great time to go up and refill that water and come back. And when we come back here in about 5 minutes, we'll have a compelling and awesome conclusion to BluSky TV today with Power Hour. Thanks, everybody. Stay profitable. We'll be back in 5.
Hey guys, welcome to Psychology Lab. It's Becky here. I'm happy to be here with you guys. Uh, how's everyone's day? How's it going? Just gonna type in the chat and say hello. Welcome back. How's everyone? You guys got some good trades this morning. It was a very interesting morning with the little pullback and then some longs. The market is bullish, remains bullish. There's a little pullback. Anyway, always interesting, right? Okay, well, let's talk psychology, huh? Because that's a key part of our growth as traders. I have experienced, and I know that's true for a lot of the traders. Nearly all that I have encountered and worked with have been, everyone learns a technical skill, and then they have to figure out kind of the deeper layers of what consistency and success looks like after you get a fundamental lockdown. And so that's kind of where we're at, and how I kind of approach these psychology labs is what topic can we discuss that really will help us all be more productive and more, lock in that green on the charts. And so that's so important. And so today was actually a suggestion from one of our traders, Mary. She is in the live streams regularly. She's in the Discord here at BluSky. And so I really love when I get suggestions, because then it helps me figure out where we're at in our headspace, and what can help you will help me, will probably help everyone else. It's when you're in class, this is early years in trading are equivalent to college to become a successful, profitable day trader. And so when you're in the early phases of that, it's strongly encouraged to ask questions and kick things around and say what's on your mind, because, that old adage is true that if you're thinking it, probably a lot of people are thinking it and working through it on their own. And I am very grateful to be in the position to be able to have these conversations with you guys and just talk about what is happening in our experiences as growing day traders and how we might be able to lock in. So I hope Mary pops back in today, because I love this topic she brought up. So the conversation today is going to be about understanding ourselves, knowing who we are and how we can make our trading work for our best good, right? Our most successful outcomes, and allowing it to play to our strengths and diminish the implications of our weaknesses, building a system that really works with who we are so that we can embrace it and fully achieve our highest potential. And so I think that there's deep layers to this. When she made the suggestion, I was all about it, because there is so many layers that we can unpack with this that are kind of driving our energy that we bring to the charts. And so let's, I love getting into the layers of what is going to cause significant change for us. So let's do that. I mean, today is it's a BluSky Psychology Day. And so, early in the week is a great time to have these conversations as well. I think that that's all good things will happen from this. So let's do it. The question that changes everything. Okay. How many of you have found a strategy that worked, only to find yourself unable to consistently follow it? Anybody? Because I have absolutely found consistent strategies that work well, and right, they are established. They come from mentors. They come from profitable traders who have been locking in greens for a long time. And so when we see those opportunities, and we see other traders making money, you think, I can just adopt that strategy, I can back test it, I can understand it, and then boom, profitability, right? That's the goal, that's the mission, that's what we are pushing towards. So what's the deal? Why are we not all profitable if there's, a multitude of consistent strategies out there that bring profits? Well, where is the breakdown, and how can we target that so that we can instead pivot and grow and achieve greater success? And so I think that the common assumption, which is certainly how I approach trading in my early, years, is that when my strategy was really fine-tuned, when I really understood view up and moving averages and supply and demand, that's when the money would flow freely and endlessly and with multiple zeros on the end. But that's not always how it goes down. Okay. That's why we have the psychology lab. That's why these conversations exist in the trading world, because it's not exactly how it always goes down. There is a deeper truth underneath of that. And that a lot of times a strategy is only as good as the person executing it. And if it feels out of sync with who you are and how you behave, how you see things, how you're trying to use risk, put risk on, take risk off, if that is misaligned, then it's always going to be swimming uphill, paddling uphill. It's going against your grain. And so it's not going to be as fluid as it could be to have like beautifully growing profits, right? If that makes sense. So you can have a profitable strategy and good risk management, which is a part of that strategy, right? It has to be. You can have a strong understanding of market context and how it moves and how value migrates and what it looks like to be in a trend. But then the sabotage comes in. That's where everyone kind of can fall on their face, right? If you don't always act consistently in alignment with that plan. So, what's the problem? Our psychology is fighting the system can absolutely be a situation where who you are is countering what you're trying to do. And so then it gets very, very messy. And so, what I want to talk about today is basically this: how can we adjust everything, understand ourselves at the deepest levels, and then make it all cohesive so that we can lock in? The unconscious is powerful, right? I don't know if you guys have done much research into this or looked into it. I'm going to talk a little bit about some research today, but the subconscious is a boss inside of every one of us, right? It's a positive energy. It's a force underlying what we are doing. It kind of helps to run and manage our trades. And so it has to be given credence and understanding and energy for that. Now, Carl Jung is an important person out there in the world who speaks to stoicism and personal growth and psychology. This quote from him: until you make the unconscious conscious, it will direct your life and you will call it fate. So that is basically getting to the heart of like, there is deeper layers of it, and we can choose to dig into those and try and understand them as part of our subconscious, unconscious, so that we can start to have some power and work with it instead of fight it. Or we can just, call it what may, call it fate, call it just what's going to happen. The chips will fall where they may. Well, I don't know, maybe let's unpack that a little bit and see if there is something underneath of that we can have, some potentially greater control over, right? I think a lot of traders will lean into fixing results by refining their edge. But what if the real work is more internal, right? What if that is what changes everything once you get your strategy locked in? I think that that's true. And I think that's why we've had some really good conversations here at the Psychology Lab related to that. So, hey, Fatima, nice to see you. So today we're going to dig into that, how the unconscious psychological patterns can shape our decisions that we encounter on the screens. Mary, I already gave a nod to you, girl, because the subject is brought to us by you. So thank you for the suggestion. I'm super happy to have had it. I really actually very much love suggestions for these psychology labs. So cheers to that. So that's what we're going to do. Actually, exactly that is we're going to explore our subconscious, unconscious psychological patterns that are having a large contributory factor to our decisions when we are at our charts, and how we can work with that to be more powerful. Okay, so let's start here. The trader you think you are versus the trader you actually are. Is that something you guys think about? Like who we believe we are to be, but then the reality sometimes speaks a different tune. When we look at our journal and our outcomes, the end of the week, we review what happened. So let's unpack that, right? Most traders know goals. We know account size. We know where we're trying to move through time, right? Through our energy and what we're bringing to the charts, what we would like to build as day traders. We also know setups. We know, buy and supply. We know, mean reversion. We know breakout trades. You have favorite setups. You have A+ setups. You have B setups that you just have to work through. And then we know preferred time frames. Like these are things that we've locked into. We have studied. We back tested. We have notes on. We have an understanding of. So that is concrete. That is something that we feel like we can lean into. But what about, here's where it gets different, right? Here's where the variability comes in. And not every trader even thinks about these things because you don't know that you need to until you know that you need to. But a lot of us don't think about early in our trading career that what our emotions will be under pressure. When the market starts moving, it starts going against you, your P&L is dipping, you are encountering some resistance and some potential struggles on the charts. What's going to happen with your emotions? Where is your underlying programming going to go to that is going to feed how you manage that trade? A lot of times this can be kind of deep wounds. And so like parts of our life that have nothing to do with trading, but have poked at our internal sense of worth and identity and belief in where we're going and status quo of where we've come from. What we understand money to be worth and how it can be used or not used and have to be squeezed coming into our world. What it feels like to be under financial pressure. All those things, I don't think that a lot of people have to think about when you're not putting this kind of pressure on in terms of day trading and you're seeing the immediate like positive or negative outcome of those situations. So I think that those are big things that it's important to kind of uncover. Also, like the hidden motivations for trading is a big factor as well. You know, are you genuinely just a practitioner and you want to understand the market movement and see if there's potential here? Or is it like largely driven by a financial money mindset type situation that may or may not be super healthy until you give it some attention and some fine tuning? So what are the motivations? What are the underlying wounds? What are our emotions going to play at? Those things are really a big deal about what happens on the charts. But that is a deeper layer of who we are that is not always focused on and kind of given the time to be understood and supported in a way that helps us kind of break some barriers and break through where there could be a pressure point at. And so a gap on, you know, you might have this great strategy, but you have the psychology that you're kind of trying to ignore because that's really deep, hard, complicated, weird work that you're not really into it. You'd rather just focus on the strategy and the money should come. But that disconnect can really lead to a very long period of complication and struggle. And so that's why it kind of blowing it open sometimes is rough for a period, but you can find deeper layers that you need to work on managing that can really be a game changer. So why do you really trade? Let's start with that. We just kind of start somewhere with this topic, right? So when traders are asked why they trade, the first answer is almost always like surface level. It's conscious. It's the obvious one, but it's generally not the real one, like the deep internal underlying one. So I love this. I heard this exercise a long time ago about figuring out your why can be surface level, but it can be so many layers deeper. So if you just start asking yourself and then going one more why deeper, you know, the surface level is like financial freedom, right? I want to travel. Ooh, we're going to get into the wound part. Hang with me, Mary. That's like deep important. So I'll promise I'll get you. But so autonomy is freedom from the control, right? We want to have financial freedom. We want to be able to make our own income. We want to not have to clock in and out for our job. There's no boss. You don't have to report to anyone when you're trading, unless it's like you and your partner maybe, or your bank account. But you have a lot of autonomy, financial freedom, so that you can be economically independent without having to, again, clock in and out. Those are a little more surface level, but they start to get deeper as you go on. But the actual driver isn't always money. It might be autonomy, validation, self-worth, recognizing that distinction changes everything about how you design and follow your system. And so I think when you can say, I want financial freedom, but why? Well, I've never had financial freedom. I have come from a home that was just barely making it through. And I didn't come with a lot of gifts and ability to travel and nice things in life. And that sounds amazing. But why does that sound amazing? What do you think you need? Well, maybe I've always felt like I was less than others. And I never felt great about the fact that I didn't have what some other families had. And I was always jealous of that. Well, what do you want to do with trading that would bring you out of that? Like, how does that make you feel? Well, I want to feel like I'm worthy of all the good things too. Like, I want to feel like I have more in me. I'm worth more. I can create a bigger world that the other people maybe had more easily. I want to build it for myself. So you see how going deeper, like, gets into like more of the heart of like what you could really feel about financial independence, what it could mean, what it could expose in who you are and what you are driven to achieve beyond just the trips and the ability to, you know, freely peruse different car models. So yeah, self-worth, I think, underlies a lot of that when we start getting into what it means to have true financial freedom. That's why we're getting deeper into these identity wounds there, Mary, is because when you start digging into the why behind surface level on all psychology questions, it gets less comfortable and exposes more about who you really are at your core. And that the who we are at our core is what creeps through in moments of pressure. That's what creeps through when we're in a drawdown, when we're in a tilt situation and we have to decide whether to feed the tilt or to walk away. those underlying wounds and like whys and driving motivations for all that we're doing is what is kind of deep inside there. And when you really feel the pressure, that's what seeps out, because your frontal lobe, where you have the focus and the ability to be logical, gets given less energy the deeper you get into an emotional high pressure situation, such as upside down in a trade or in beautiful profits in a trade as well. So those are a big deal. I think the hidden motives that shape trading behavior, most people often trade to meet psychological needs that they haven't consciously identified. Again, that's where we're going at today. So these motives don't disappear, but instead they surface through behavior because they're not obvious. You have to really have some quiet time and think about and maybe journal out, like, what is my why? And if you get to a why, what is the why behind that? And then you peel back the layers of the onion on that. And doing some focused work like that will expose these, underlying layers, but they are usually not consciously identified early in a trader's career or until you really kind of poke at it. And so what could be there, right? And so a validation, needing the market to confirm your intelligence or your worth. That's that self-worth kind of thing playing into there. The market can be really validating. When you start learning a system and you talk to other traders and you start locking in good trades, it can be such a boost for who you are and where you're going and what you are worthy of in terms of finance or credibility or momentum or prestige in this industry. That can be something that you didn't think about. It could just be early. You want money to travel and you want to see if you can do this thing. But then once you start getting into it, the drive to persevere when it gets hard, that comes from something deeper. And this validation could be a key point. Also, control. So seeking certainty in inherently uncertain environments. Now, there is a lot of variability in life, in adulting, once you get past childhood and early adulthood, the teens and the early 20s, you start to figure out, like, my life is going on. My life is progressing. Like, what does that look like? What is my experience? What could I have control over? Where could I take it? Where am I stuck? That is a sort of control over our lives that not everyone seeks to have and is not super tangible if we don't purposefully pursue it. And so that is a sort of situation where, like, there is a lot of uncertainty and a lot of things could be taken out of our hands in terms of you're an employee and you need this pension and you need this health insurance and you need you need to work your hourly hours so that you get this paycheck so that you can afford to do this and blah, 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 XYZ. You get kind of stuck in a rat race. But if you want to pursue, bigger things, there's a control element of, like, can I control it? Can I not? There's uncertainty up there. What does that mean? And then if you're seeking control, but it's still uncertain, then if you squeeze it too tight, it's just going to blow up harder too. And so what our connection is to needing control is a big driver as well for a lot of people. Some people really need that. And so in moments of uncertainty, it gets dangerous because you start making haphazard choices. You start making emotional choices to grasp back that control instead of being a little bit more fluid with the uncertainty that is kind of in the backdrop of what trading is. We can't always lock in certain outcomes, but accepting that, it takes a choice. So recognition, trading for social status or to prove something to others. That's a tricky one, and it's a slippery slope because it's easy, right? Trading is, obviously, we're online on YouTube right now, right? Online on BluSky TV. Seeking recognition is a very real thing that you can get into in trading. And it depends on what communities you're in, what rooms you're in, who you have learned, who you have met. If that's a part of the vibe of a place where you're at, is to want to seek the recognition or a status or being able to, post XYZ each day, that can drive you to make certain choices. That can drive you to not take a loss because you don't want to show a red P&L, or to trade minis when maybe you're not totally ready because other people are trading minis. And so you want to be like them. That can be a dangerous situation in terms of, like, trying to fit in or one up or look great instead of really locking into good trading. And so those are different energies that you can bring to your trading, and seeking recognition can make sense, if you haven't had it or you've had recognition in other areas of your world. Maybe you had a second career and you really were a high achiever, well recognized and well supported, like sought after as a resource in that environment. And so then when you come to trading and you're new, you're like, no, I'm a boss. I'm really good at what I do. Like I succeed. People look to me for advice. That can carry over. But when you haven't had a really robust, consistent system for quite some time, it's harder to seek that earlier, but that can be a driving force for the way that you behave on the charts. Now, throughout today, I just want to say, with each of these topics, I'm kind of just, some of these are going to be more powerful for us and some of these are going to be less powerful for us because we're all made up a little bit differently. So I wanted to seek the main ones that impact most of us and kind of talk about them independently. And then as you guys are listening, just think about what your experience is and how it has potentially played into your trading. What speaks to you more might speak to someone else a little bit less. And so we just need to find the parts that really kind of make sense with our journey and our experience. And then, get the information from that and allow it to help us like strengthen who we are as traders. That's the whole point of this. Because with psychology topics, it's massive, right? The way that our brains work is like so variable. And so my role here talking about like one subject, I kind of talk about it from different angles. So that way you can hear it all and then see which one strikes the nerve most in your energy. And then those down along that line is going to be the most helpful, is how I see it anyway. Now, freedom also, escaping a situation rather than moving toward a goal. So sometimes we seek the charts to feel some kind of way, whether it's freedom from your job, you have the autonomy here and you're irritated by an obnoxious boss over there. And so this is a freedom for you to just do you and to like potentially build something impressive that is on you. A retail day trader, like we hold the responsibility of our outcomes. And so that gives you the space to like do you, like believe in what you are trying to achieve and lean into that freedom that trading can provide. Instead of just like, if I make $400 a day, then it can do this. And it's like a really business model strategy. Just seeking kind of almost an escape into that freedom can be good and bad. Like there's deeper layers of freedom, I guess is what I'm saying is, it can be used for a positive energy for the freedom that you're trying to create for your family, and then have that be a factor behind a business model and a strong strategy that you adhere to, versus just seeking almost the privacy to just do what you want to do. And I think that part of that underlines a lot of us retail traders' approaches, but it has to be contained within its place, understood, given the, respect that it deserves as part of our situation. But the priority has to be strong executions in order to make money, because there's just too much leverage in the world of trading. There's too much ability to lose money. You know what I'm saying? Carl Jung again, the privilege of a lifetime is to become who you truly are. And that's why I think these conversations are so valuable, because trading is a beautiful opportunity, like really incredible, massive, like overwhelmingly positive opportunity for us. And it can help us give an avenue of becoming who we really are. It can expose our deepest like wounds and identity layers. And then we can work with them, grow with them. If we find something deep within us that feels like an unstable wound, something that is hurting and that expresses itself on the charts in and potentially a negative way usually, then if you approach that and you try and heal that and then adjust it and make sure you're giving it credence as a part of who you are that made you and brought you to this point, and working with it as you move forward, it's so powerful. So I love that quote. Okay, so the drivers behind this, right? Let's keep knocking through this. Many behaviors that look irrational from the outside are psychologically logical from the inside. So they're not mistakes necessarily. They're a response to unmet needs. And that's where I'm talking about like the deep needs within us that we don't always recognize. If our executions, our outcomes are kind of trying to meet that need without asking us permission first, it can play out on the charts. And so we want to recognize those. Now, this is a different way of looking at similar things that we just covered. So I'm just going to cover it in a slightly different way, because maybe it will like help just kind of experience it and understand it. So one of these is definitely the need for certainty. So over-analyzing, freezing on entries, waiting for one more confirmation. The market threatens uncertainty and the brain seeks safety. And so these situations, this is where you kind of have more of the like hesitant profile on your charts, where you see your setup and you just wait. You're just not sure. You're not sure if it's quite there. One more confirmation would make you feel better. And then all of a sudden it starts flying. And that's really frustrating. So that need for certainty could be a part of deeply underneath of like, you want to feel safe and you want to make sure that you're making the best choice. And this has to be super logical and smart, and it has to be a good investment for your money. And so then you kind of hesitate with that. And so that seeking that safety is something you kind of want to recognize and give support to and space to, and allow that to be a part of who you are, but then work with it in terms of targeting. Then in that situation, you want to target decreasing hesitancy in those sort of behaviors with active choices. A need for significance is another one. So oversizing positions, chasing home runs, the losses can become identity threats. So this is where you're like less comfortable in taking the hits, and you give it more room. You will average into a loser because you don't want to take that loss, because you want to feel really positive with who you are and what you have going on. And so the losses can become threatening, not just financially, but also to your worth and your core. And so that can create these type of like more aggressive sort of behaviors on the charts. The need for control. So that would be like moving stops, interfering with trades, kind of monkeying trades, squeezing trades, overriding your system. That's where the uncertainty feels intolerable. You want to be in charge. You want to make this work or not work, and it has to look like this. And so if that uncertainty really bothers you and you need to have control over your situation, it's going to play over in these certain ways on the charts, interfering with your trades and overriding your system that you have defined. If it says you get in here, then you get out there, but instead you get out here because you just don't like XYZ and you want to. So over managing could be a sense of an underlying need for more control, which is something to kind of know and give respect to in your life. Similarly, the need for achievement, which sounds really positive, right? Like achievement, high achieving, like making that great P&L, making those outcomes, that's the goal, which it still should be. But if you lean too heavily and the winning is expected and it needs to happen, then you can also not take the losses and not let it happen over time, but instead you can put pressure on doing it faster so you get the rewards. Your standards keep rising. You're not satisfied with the $300 that got you to a payout by making $300 consistently. Instead, you are more so forcing bigger outcomes to make sure that you are achieving higher metrics instead of staying stagnant or whatever, even though it's just allowing your system to catch up with you, which that can lead to burnout because you're constantly increasing the pressure that you're carrying on yourself, and it makes it harder and harder and harder. And that is definitely a recipe for tilting. So realizing if you can kind of dig into any of these behaviors that are in the starting of each of these boxes, the oversizing or moving stops, if that is a behavior you see on your trading, then the title of this could be kind of an underlying subconscious need and driver for you, which is a part of all of us, right? These are the psychological energies for all of us. And so what drives people is not what they know, but what they need. And I love that quote by David McClellan, because driving forces are not always understood. It's not always logical. It's not always mathematical and scientific, especially when you're doing something as day trading. It's the psychological element is very, very real. That's why we have these conversations. That's why the psychology topic is so big in trading, because, when your strategy isn't holding you and you're struggling, there's a psychological underpinning to that. And so figuring out what that need is that is coming through your trading and out in your executions, identifying that and working with it is such a powerful choice in terms of targeting the need versus the way it plays out on the charts, which is why I love this conversation so much, that we can dig into this. Oh, where's my mouse? Self-awareness is a performance multiplier. You guys heard the term self-awareness? You guys are kind of sleepy in the chat. Hope you're just enjoying listening to me keep carrying on. But self-awareness is a really powerful tool. So there's research behind this. This is why I'm going to nerd out with you guys on science a little bit, because I like to do this every time we get together. But a lot of the way that I think about the topics that we bring here today is like, is there psychological research that supports what's going on in our brains and how we can work with it? And there is such psychological research behind this topic. So this one research study found that while most people believe they are self-aware, only a very small minority actually demonstrate when it's objectively measured. So they figured out like objective tests to figure out what your self-awareness level actually is. And for people who thought they were really self-aware, it was actually a very small number that played across and made it through that test, showing true self-awareness, which is so interesting, right? I think we oftentimes say, of course I'm aware. Like I know who I am. I know how I show up. I know my strategy. But the layers beneath that, I think, is where the real money is at, so to say. Self-confidence in self-knowledge is in itself a blind spot. So in trading, blind spots can be really expensive, right? If we don't know, we don't know, or we don't know the underlying issue that is holding us back, there's so much risk there, because you're basically not really exposing and really dealing with the biggest thing at hand. And so studies in emotional intelligence consistently do confirm that self-awareness is the foundation for self-regulation. And self-regulation, you guys, that's where we want to live. That's where we need to lock into being able to recognize what our minds and our emotions and our psychology need, so that way we can regulate and make the right choices in the moment. Self-awareness is the foundation for self-regulation. So that's where I want to talk about. Self-awareness is super, super a powerhouse for us. You can't manage emotions if you don't recognize them, if you don't call them out of the shadows, if you don't name them and say, I am feeling XYZ. Probably that means this is the risk and I maybe should walk away. I'm feeling really stressed and anxious and I'm very uncomfortable in this position. Probably that means you should close it because you're no longer operating super focused and like front brain mode. So before asking, how do I stop revenge trading? This is where I want us all to think of, what is revenge trading trying to satisfy within me? Am I trying to regain control or restore self-worth after having a bender on the charts, reducing discomfort? What underneath of what I am experiencing am I trying to like fix right now by getting back in this trade, by forcing my P&L to go green because I don't want this red day? What else is there? Are you having some concerns at home? Are you worried about money? Are you worried about making it so that your status stays up or what have you, depending on where you put your energy when you're not on the actual charts? James Clear is one of my favorite authors because the book Atomic Habits is fire. One of his quotes is, awareness precedes control. So if we are aware of what's going on, that's how we get the control that we desire. By understanding all the aspects of especially our psychology on trading, understanding that what we are experiencing makes it less vague, makes it a real thing, makes it like, data on the charts. It's data in our brains. So then with that, we can build the control out of that because we have shined our lights brightly on our emotions. And so then we know, then we can create a strategy anyways that says, if I am heavily in this emotion, this is what I ought to do. And that puts it into your strategy book, in your playbook, as example of how you're trading a breakout trade. Well, how do you manage sadness and sleep deprivation? Probably should be taking a day off, right? Going for a walk outside instead. Thanks, Fatima. Okay, so let's discover our trading operating systems. Okay, so this is where every trader has a psychological operating system running beneath the surface. The goal isn't to become someone else, especially you see someone out there in the charts, you see how they're executing, you see how they're living, you see what they're putting forth in their energy for their trading outcomes. The goal shouldn't be to become them. Instead, I think what is the most powerful is coming into alignment with who we already are. Who is Becky? What drives me? What do I really want? What scares me? What makes me want to squeeze my trade? What makes me want to go all in and throw caution to the wind? Like, what parts of me come out in those moments? And then what do those parts need? How can I manage them? How can I settle them so that I can really treat trading as a business? So for each of us, I think that we can do some things with that. These are questions that will help us get deeper into knowing thyself, understanding who you are, who I am bringing to my charts, who it is that sits down with access to the mouse to click the buttons. So what emotion do I struggle with most? Is it fear, frustration, boredom, greed, impatience? And if you guys want to screenshot this and just take it for part of your journaling exercises tonight or tomorrow, or when you have peace and quiet and you want to really spend an hour thinking about your psychology and how you want to like really lock it in, because hello, we want fat payouts. And if you want a fat payout, spending an hour on psychology once a week is a really strong choice. I'm just saying, I'm not saying because I'm a psychology coach. I'm just saying because I like the payouts also. So screenshot this and then use this as an exercise. But what emotion do I struggle with most? These are some suggestions. It could be anything. Just kind of go inward and like let that question sit in your mind for a moment and think about what is the strongest force for you that gets you into trouble. Another question to ask to get kind of into the heart of your core is, what emotion am I actively avoiding? So failure, rejection, powerlessness, embarrassment. by asking ourselves these questions when no one is there, when you're not in psychology lab, when you are by yourself with a pen and paper, it pokes at a part of ourselves that it's less comfortable. It's not super fun to poke at this part of ourselves and to expose what maybe our red days look like underlying our hearts and our experiences and our energy at our core. Maybe something from our childhood kind of fed into this situation that is deep inside of each of us. But if you can say, I am avoiding failure and rejection because at some point in my life, like, I had massive experiences with failure and I had to dig my way out and it was terrible and I hate that time of my life and I'm not going back there. So maybe in your charts, you're avoiding taking a stop out, you're avoiding a small red day or not averaging to a loser because that loser would feel like failure. You see how it kind of can be like, oh, shoot, like that does really sting. That certain experience really stings for me. And it's because it has stung before and I don't want that anymore. If that's the case, we'll talk about what we can do with that, right? But I think first, digging into your own psychology, your own experience in this life to figure out where your soft spots are is a big deal. Another question, what does winning mean to me? So money, proof, validation, freedom, safety. The meaning shapes the motivation. So what a positive outcome on the charts means, what it will provide to me that I need, that kind of creates an awareness also in your situation of I need money. So like you need to make sure you're backing off and you're position sizing for longevity and to be able to get your accounts to hold through a period and get to the payouts phase. If it's validation, maybe if it's for a good way and it's like in a safe, inviting, supportive community, such as our great one at BluSky, then you can continue on. But if you find yourself in rooms where it's constantly trying to like one up each other and like people are talking smack about someone who gets a red trade or whatever, don't do that. Like you need to tune out anything that is putting more pressure on these things that are dangerous for you, such as constantly seeking to be the best in a validating situation. Another question to put into your potential journaling opportunity on this is, what does losing mean to me? I was wrong versus I am wrong. This distinction is kind of a big deal. So when you are in a losing trade, do you think I was wrong on that trade? It's not going to work out. That support didn't hold. I need to take this hit and see what else is going on. Maybe I'll look at this. If ES is being obnoxious, let me look at NQ or gold. That trade just didn't work. My long opportunity was wrong. Versus I'm wrong. Like I can't get this trading. Like I don't understand why I show up every day and I'm trying to win and I'm just wrong on the charts. Like if it's about you versus about the trade idea and the data that's printed, those are different energies and they can really kind of hurt a little bit if you make it so personal in terms of your worth and your experience and your ability to be a trader versus let each trade stand alone. We all come to the charts. We make an analysis on the market. We make a thesis on what it might happen. We have a plan for what our best trade would be, and then we execute. And so if that trade doesn't work out, that's the natural variance of being a trader. Like there is no 90, 100% traders. That's a lie. And so if our trade is wrong, that just needs to be that trade was invalidated. I can't wait for another opportunity that maybe will be better and then I can make it up. And it's not a big deal because the loss was mitigated. It was kept small and within reason for my account. So that containment, I guess, of the risk is like really, really helpful for our mental stability, right? Yeah, Reno, thanks for being here, friend. All right. So what about this statement for yourself too, guys? This is the journaling page, right? And so have this as part of this experience for you as well. When I lose money, the story I tell myself is. Now, this really plays into this last question I just covered is too, what does losing mean to me? So when I lose money in trading, what does that mean? I don't want to tell my spouse. I'm worried about paying my rent. I can never make this. It's been 2 years in and I'm still not making a damn profit. So I guess I just suck. Like if that is what it tells you, there is psychological work to work on. These questions need to be explored every week until you really kind of get to the raw heart of them. And then you can start to heal those and think about what you could do differently in your daily actions, in your approach to the markets that contains that emotion while you maybe work through it in other ways that we can talk about as well. But if instead, when I lose money in trading, the story I tell myself is, That trade didn't work out because support didn't hold. So maybe we're actually having a bearish day. Let's see what my larger time frames show. Let me pull back. Let me, phone a friend, see what Waji is thinking on the charts right now, see what Fatima is thinking on the charts. It looks like it might have rolled over. No wonder my long didn't work. Factual, business, on the charts, data driven, not underlying emotional validation, right? It's quite a different situation. And I think that each of us is going to find some answers in this journaling that is emotional, that is deeply psychological, and that deserves a little bit of love and attention and support for where we're trying to go. So how do we lock it in, right? Designing a system around who you actually are. So we talked a lot about kind of blowing up and getting to the heart of who we are as traders. What do we do with that information? That doesn't sound fun, does it? Well, it's not always going to be fun, to be honest. It actually might be really hard at times to kind of get to the heart of it makes me think about this period earlier in my life when I had these really rough things happen to me and I didn't like the outcomes, and I've been working really hard to move in the right direction. If that happened to you, that's not going to be a super fun thing to relive. But the point of it should be powerful. It should be, what can we figure out that we ought to make sure we're giving credence to in our current world? So are you the type that hates uncertainty? So mechanical rules and lower discretion tend to work better, right? If you hate uncertainty, then make your system really black and white. I want to only entertain a trade if I see this candle pattern and this is the breakout, this is my trigger, this is how I get in, and my risk is always at this point, under this level, what have you, whatever your system is for risk management, ATR or a point system or a candle closure. Having hard rules will help kind of manage if you're the type of person that is really uncomfortable with uncertainty. Maybe you had a lot of uncertainty earlier in your life and you just need to feel safe. Well, create an ironclad system. I think that that's an excellent idea. Systematize the decision so it's not emotional. So you don't feel as if there is uncertainty and you don't know what you're going to do with XYZ. Systematize it and that's the type of person who really will thrive with a really consistent, hard, black and white system that they can refer to at any point. Will really be helpful. Now, what if you're the type who have found that you thrive on flexibility and you want that freedom and that autonomy? So then structured discretion and context-based decision-making may fit better with guardrails, not rigid rules. This is me. If I had to think about everything on the screen right now and who I am as a trader, when I was putting this together, I was sort of, every time I put together a psychology lab as a side note, it makes me think about my whole self. My life, my psychology, my emotions, my trading, my most recent trading day, my experience as an evolving trader. And so I always am I should think about that. And when I was doing this slide to kind of think about where we can go with this is who I am. I really prefer flexibility and fast choices, and I can switch teams in a given day, no problem. I can switch instruments. I want to be able to see a lot of things and make quick choices. I can get into trouble there. I can do a lot of executions and stuff that way, but I know that for me, I'm comfortable there. I like taking the data quickly. That's why that's why I've gravitated to day trading versus swing trading and long-term investing. I want the action. I want to make quick choices. I want to be challenged in that way. That fits with who I enjoy. That fits with part of my internal structure that works well. And so I want my system to cater to that, because if I try to follow strict rules, there will be a point where I'm like, nah, F those rules. I'm not doing it. It's annoying and I don't feel it anymore. But if my system instead is has structure and has a basis and has a clearly delineated A+ strategy and setups, and then I have a little bit of discretion around those. When I see a certain level acting as resistance and I'm starting to get some energy there and I'm starting to get some closures, I need to have some discretion and some context behind my choices. And then I can take a trade without it being a perfect setup. In some ways that probably feels terrible to other people. So traders that really need some certainty in their life, they're like, you're just a gambler. I think it's gray. And I think we each have to know who we bring to the charts and how we thrive, because it's different for us. And so if you really like that flexibility, I do best when I have a structure and a system that I'm working on trading, but I give myself a little bit of wiggle room, because then I'm not fighting myself with it. I'm instead saying, you really need to see XYZ. And if you're going to trade before you get more confirmations, You have to start with a small position. And then as the confirmations come in, then you can add. That is one way that I directly manage as part of myself, and something that I had to learn over time of going full size at the beginning. Will sometimes take me out full size very fast, and my trade could work, but not before I'm not stopped out first. So allowing myself that flexibility looks like leveraging down in the beginning until more confirmations come in. This is an example of knowing thyself and adjusting your trading entry criteria to fit with that. Does that make sense? No rigid rules for this personality, because that can make them fight the system harder and just really just throw it all out the window and go rogue. Done that. A couple people in this room know me quite well, and so you know that. Okay, so what about flooded by frequency? Fewer trades. If you're like, you just trade, like you put a lot of trades on the chart. My girl Kendra, many years ago, one time we were learning to trade, and she called it confetti party, basically, when you overtrade the crap out of your day, and there's longs and shorts and stops and hits and targets and stuff. And if you have your fills on, it's a confetti party. So that is very frequent trading, and not always for a good thing. Some people are scalpers and they just lock in 20 points, 10 points, 20 points, 50 points. That can be their system. But if you trade high frequency and you're getting a lot of mixed results, maybe you got to back that off a little bit. Fewer trades, but higher quality setups. And so in that situation, if that's your tendency, don't say I can only trade once a day, because you're not going to do it. But to kind of delineate, I need to slow it down a little bit and really say I can take a couple of trades, but I have to prioritize at least these parts of it so that they're really high quality. And that will help you, allow you to take your frequent trades, but to specify that they have to be a certain quality and have a certain number of confirmations at least. And so you want to be able to slow down the amount of money you're throwing around and lock it in specifically. And it makes your trades a little bit more effective, but still allows you some freedom to trade. So understand what you're trying to do when you're unregulated, and then create a system around allowing that to come through, but regulating it to a certain extent, if that makes sense. A good trading system is profitable. A great trading system is profitable and psychologically sustainable, which is what I'm talking about today, which is what a lot of my psychology labs talk about, is making a good system better, making it great. So that way, when you do have a strong strategy, you have good mentors, you have a good read of the market, you have an ability to make good trades. If you get your psychology stable around that, that's where the magic happens. That's where the consistency and the ability to leverage up and the ability to compound your gains over time, that's where it gets incredible. That's where the doors open and the ceilings just float away, and you can keep pushing yourself. Because if you can get your psychology super rock solid and in support of your strategy in terms of your hard system and your trading approach, then it all works together and creates like this beautiful finished product type situation. I mean, we're never done learning, but it sets the stage so much more stably for that bigger growth. All right, so the ultimate goal isn't just better trading. The deeper purpose of self-awareness isn't really just profits. Because, I mean, of course it's profits, right? Of course, we're day traders. Like, you wouldn't be here if you weren't trying to make a lot of money from the market. Same. But if we can get to a coherent level with our trading and our approach and who we are as day traders, that alignment between who we are and what we do is where you get that sweet spot that I'm talking about, of like, it just flows. Like we can really just lock in and see our great setups and go for them and get those beautiful outcomes that result from that. And so your decisions improve, right? Your clarity replaces a reactive kind of background noise. I love that, because we need to be able to make good decisions, but it's so much easier to make really strong decisions when it fits with the whole picture of what we have going on. So it replaces that reactivity. And then stress decreases, right? Like being able to trade and not be super stressed about it is so important, to be able to not fight your system. When I trade against who I am, it's not better. It's like, it puts pressure on me. I'm like, I'm trying to do what he said because he says this is how I win. That is higher stress. You're like trying to do all these other things that you're told to do versus like flowing with it. And I don't know if you guys have ever heard me talk about the market as a lady, but Miss Market, she's in charge. She runs the show. She is creating a dance with buys and sells and movements across the chart. And our job is to flow with her, to to pick up the cues and to get in sync. And if she's like climbing, then you need to find a pullback to like get in that party and then ride that train. Like you need to get in alignment and flow with Miss Market. And so if you can do that with Miss Market and yourself, like that's so much less stressful. It's so much like smoother and it feels good. You can make bigger profits. You can scale it in and out, and you don't have to ride as much drawdown because you're not fighting it of like, I'm supposed to be long if I see this and then. So that decreased stress when you're not fighting anything, the market or your system or your soul, it's so much smoother. So confidence grows, right? This is rooted in self-knowledge, not in outcomes. And so if this is making sense and you've spent some time to like figure out, like I am oftentimes trading, if I get into a revenge trade, it's because of, this tendency to be afraid of failure and abandonment and loss that stems from something earlier in my life that was really hard. If you say like, this is just the market, this is a financial choice, I'm a business person here, I know that my strategy holds, and if I take a small stop, that's how I make it to the profitability. If you can say like, I have this emotional need, but that's not this. When I'm at my charts, I am in business mode, I am trading my system. If this happens, then I go long, etc. So you will get more confidence by having that self-knowledge and self-awareness of all the aspects of the things that you're going to encounter when you get to the charts and the pressure starts coming on. And so that's how you get more confident through this, not just the outcomes, not just having green days, but instead having an understanding of who you're bringing to the charts and what you're going to do when it starts to get weird, when it goes against you, when it goes really in profit, what you might do. When you're presented with a loser, do you let it hit or do you add to it and move your stop? Having an awareness and understanding and a knowledge of how to work with yourself in those moments makes you so much stronger, like so much stronger to be able to handle whatever comes at you, which I love for all of us. Anything that makes us more confident. Like there's a thing of like, you can't have an ego to be a consistently profitable trader. Well, anyone who tries to be tradable, who tries to be a successful trader has an ego. Like in order to think you can be a winning day trader, you have a little bit of ego in there. The difference is managing that in a healthy way, recognizing that you want the confident parts of an ego without the over leveraging, overconfidence, tuning out noise, being ridiculous part of an ego. But instead, like a healthy confidence is required to reach the higher goals and to compound your profits and to eventually start leveraging up and maybe trade copying at some point. So the goal should be seeking that knowledge and awareness so that we can get in this flow state. Thanks, guys, for the comments and the support. Okay, so consistency also, you guys, like consistency increases, which consistency is the core of the compoundability and the long-term profits. And so when you are in alignment with your process and who you are, who your emotions are, your awareness on what comes out when you get in these trades and the leverage is on the line, when those are in alignment and you have all eyes on what might come out of me and what I'm going to do in that situation, if I start to get really pressured and I start to revenge trading, that's a sign that I have to just close the position and go for a walk. And maybe later there will be a better trade, but my account will live. If I am trading from this really aggressive, unfortunate spot where I'm mismanaging my trades, just stop, phone a friend, like reach out to your accountability partner, my girl, and take a break and come back, because you can have that consistency when you're in alignment, and having that awareness to not engage when you're not in alignment, it will really help you have the long-term profitability from that. And so we all want that consistency. All right, so let's have one final little reflection today. If I become wildly successful trading tomorrow, what part of me believes that it still wouldn't be enough? Like when we're thinking about this whole thing in trading, like what does that look like? What does massive success look like? How will I feel? What will I need? What will my experience be? And then recognizing that if you're encountering some resistance there, that could also be shining a light on what else you need in your life for fulfillment. Maybe it's not really about the money and you want to work on like having that balance in that family and working on making sure that your loved ones feel that and that your emotional relationships are solid, as well as the profits. And so kind of approaching this thing holistically, because if you're not coherent in other parts of your life, that plays over into all of this, not just our history in earlier parts of our lives or potentially your childhood, but also the situation going on around you intraday, in the moments, in our interpersonal relationships, in our finances. And so to think about what would happen if we were wildly successful. Are there problems that would still persist? Would we not feel satisfied? Is it not just about the money? that can expose parts of ourselves as well that we can, again, aim to understand deeper, and then think about that other side about how conceptually they're coming across in our outcomes, in our executions, in our trade management. And then knowing what we need to do with that and how we can basically fine tune our system to know that that is a part of us and to work with it and to say, like, this is something that triggers me. If this trigger comes up, I really, really, really need myself to do XYZ, to walk away, to call someone, to take a day off of trading because this day happened and it's pushing at something that is not a great feeling for me. So I'd rather spend some time just journaling that out and focusing on another part of my life and steadying my nervous system before I come back at it. And so that's what this whole work is about, of like asking those hard questions, getting into your soul, and then seeing how that plays out into your charts and what you can do to shore it up. You guys have heard of Aristotle, I imagine. One of his quotes, knowing yourself is the beginning of all wisdom. So that's why this suggestion, Mary, was amazing. It was absolutely perfect for a psychology lab, because knowing ourselves helps us work with who we are to have way bigger wisdom and ability to manage ourselves and to have no ceiling on our life, because we truly understand our deepest motivators and weak points and potential for struggle, and we can work with that and grow from there. So knowing ourselves is a PowerPoint for where we want to go with this, and with trading being the incredible opportunity that it is, right? I truly believe that trading is an incredible opportunity. So knowing that we have that, and we know what we know to be in this room today and growing who we are as traders, let's spend some time there and understand that part of ourselves so our system can best work with us. So that was great. It was a good conversation. I love Tuesdays. Any questions, any thoughts, any requests for next time? If you do, within the BluSky Discord, it'll be linked in the show notes today for all of our lives, how you get to the BluSky website and the Discord there. It's free to join. There's a suggestion area. Once you get verified, I think is how you get access to the lounge and the futures chat. But anywhere in there, like I'll post every once in a while, you can ping me directly or just tag me in a post and have a request. And every time I'm pinged, I'll 100% read it. And I prefer to take requests. So anytime, y'all know where to find me. Okay. Feels like power hour, right? So I am going to remind you one last time, like and subscribe if you found any value in this. This will be posted independently on YouTube later this afternoon. So that way, if you came in late or you really liked it, you want to rewatch it, you want to grab those screenshots, you can find the recording of this after the fact on BluSky's YouTube channel. You can share it with a friend, do what you want with it. We'll let you guys know. They'll be on here later, but like and subscribe, hit the notifications. That way we can keep coming at you with great streams and live trading labs. My trading lab is every Tuesday at 2 p.m. Eastern, and Matt's technical lab is Thursdays at 2 p.m. Eastern. So we have all kinds of varied content for you guys. So share with a friend. But now we got a little more time for a trade. Oh, identity wound. Identity wound. Okay, so I kind of didn't specifically say that, but identity wound is that when you ask those questions and you get deep into what is really the root of your pain, that's an identity wound. So if you ask, why am I fearful? Like, what in my life, where was I previously really fearful? And like, what was that situation? So that's when you can get into the identity wounds that could be playing across. So if you're noticing fearful choices on your chart, such as squeezing the trades and micromanaging them and over leveraging on a loser, if you feel like there's a fear element of that, you go deeper into why is that happening? So asking your questions, the whys. Why do I feel this way? Well, I feel this way because I don't want to lose. Why don't I want to lose? What would that mean? So you ask those whys and you peel back the layers deeper into that experience. And then that reveals a deeper wound inside your psychology. And that's where you find the heart of what's going on that you need to sort of like recognize and be aware of and say, gosh, that situation as a child is still there. And it still is deep underneath the outcomes that I'm seeing on my charts, because I pulled it back and it was a direct line to that pain point from earlier. So that is still coming up sometimes, I think. And so then giving some awareness to that, if it's really deep, you can potentially seek some therapy around that, which is really supportive for a lot of people. But at least you saying, if I'm feeling this way, that could have this outcome. So I need to recognize this emotion and act differently on my charts if I start to feel this way. So that's kind of how you get into the identity wound point. And that's a great question. I do too. Mary, there's a reason why I'm a psychology coach around here, is because I have done a lot of this work because I needed to. Which some of my previous episodes, the early ones especially, I kind of was more open. So maybe I'll need to do a little backstory on one of these too. But I think we all could shine light on this in different ways for ourselves. So I really am so glad that we get to have this space to talk about these questions and these conversations. Like, it's really valuable for me as much as I think it is for a lot of traders. Thanks, guys, for being here. Reno, Waji, Mary, Jonathan, Fatima. I'm really thankful that you guys are in this community. So let's know ourselves and master our trading, because there's too many profits out there that we need to be a part of. All right. I am going to hop off here so that we can get into Power Hour. And so just don't go anywhere. I'm going to literally flip screens and we'll flip the backdrop here and we'll talk charts here in just a minute. So I'll see you guys for Power Hour. Let's stay profitable.